interaction question. Good morning. It is June 6th, 2023. We're going to be streaming stock market today, trading stocks, options, futures, looking at technical analysis, watching the SPY, GME, BBBYQ, some crypto news this morning. Oh, geez, yeah. Coinbase is getting dunked on. Sub up, like up, comment down. Happy Money sticks around. He follows on Twitter at HappyMoneyYT. Tweeted out the stream this morning. I appreciate all your retweets and your likes. Those are awesome. Yeah, SPY's pretty flat. I opened up the short futures and I closed them here. So I close them before market open typically. We didn't get really any gap down, so no reason to hold to the morning volatility. I'll wait to see. Just trade today as it comes. SEC is going after coin, so we're not filing. Remember how they said they were gonna crypto exchanges have to start filing? I guess none of them did because Binance is getting sued by SEC, and now I guess Coinbase is also. So that's where we're seeing this reaction. 46, it's pretty significant. So this is what Yogi Genza was talking about. He's talking about cleaning everything up and going after the bad guys, I guess. Trying to collect more fines from crypto exchanges. I think that's the main news this morning, really. Not a whole lot of data this week. 23% of jobs will be disrupted by AI, with 14 million jobs overall worldwide. Down 20%. Wow, wee wow. Thank you guys for your pre-market likes. I appreciate it. We're at 7 likes on the board. Well done. Got about 15 minutes to open. Good morning, Tyler. Good morning, Kitty. Sweet Lou, were you really the first like, though? I like gummy worms. Good morning, Buzzin. Good morning, Keenan. You guys had a good rest. Good slumber. Forza's up. Let's see, up 20%. Jazz is loud this morning. Why does it change? I don't know. Yeah, there's Forza, so it's continuing its trajectory here. Pretty clean trend we got there on Forza. That ain't bad. We have GME earnings, what, tomorrow? I actually shared an article, I'll read it real quick, just showing what analysts were expecting. And, see, what was it? So analysts are expecting an average loss per share of 12 cents for this quarter. So typically this is, I think, the worst quarter. Q1's usually the worst quarter for GameStop. So they're expecting an average loss of 12 cents, which means earnings growth of nearly 77% compared to last year. So they're still expecting a lot of growth, almost 100% growth year over year, but would still give them a negative EPS of 12 cents. Revenue, they're expecting 1.36 billion, which would represent a slight decrease of 1.4% year over year. I'll just read this section, pretty good article. As usual, GameStop did not provide guidance for Q1. However, the company's management has been empathetic about cutting costs, especially in Europe, and targeting profitability for 2023. Renegotiating better terms with suppliers and vendors and acquiring full console cycle allocations are other initiatives in the company's plans to meet its long-term profitability goals. So if GameStop does report another consecutive profitable quarter, it will be due to the reduction of the company's selling, general, and administrative costs and inventory management, rather than to an unexpected surge in company revenue. So they're just reiterating basically why we saw a positive EPS on the last earnings. In the previous quarter, when GameStop reported a net profit of $48.2 million, SG&A expenses, a key to profitability, decreased from 23.9% to 20.4% of sales. There you go. The company also enjoyed a good inventory write-down, with GameStop reporting $682.9 million in inventory versus $915 million a year earlier. So they sold almost just over $200 million in inventory and haven't replenished. Thus, because revenue expectations for Q1 remain roughly in line with what GameStop reported last year, the company's continued cost-cutting initiatives may be key to net profitability. So if they're still going on that boat of just selling out of inventory, there might be expectations, because it sounds like the expectations are basically just in line with what it was last year, and not necessarily they haven't necessarily changed their expectations a whole lot from the Q1, just because it was from selling out of inventory. So with that, we might get a bullish reaction. I was somewhat bearish, but the analysts are not altering their expectations much, I would say, based on Q1's earnings. Last quarter, GameStop caught bears off guard by reporting earnings per share of 16 cents. Analysts had predicted the video game retailer would post a loss per share of 13 cents. GameStop's unexpectedly profitable quarter caused GME shares to soar about 50% after the earnings announcement. Last quarter, one of the few analysts covering GameStop, Wedbush, Michael Pachter, provided a $6.50 price target for GME with an underperform rating. Pachter claimed that shares were trading at levels that are disconnected from the fundamentals of the business due to irrational support from some retail investors. Although GameStop shares are still trading 40% higher than they were before the previous earnings release, and 73% above the Wedbush analyst target, Pachter has reinforced his bearish thesis for Q1 earnings and left his price target intact. All-day sales largely contribute to GameStop's fourth quarter net profit, making it questionable whether the video game retailer can pull off that feat for the second quarter in a row. But if GameStop does report a net profit in Q1, it will be a catalyst for the stock's retail investors to drive share prices higher. Currently, short sellers hold about 21% of GameStop's outstanding shares. As demand for shorting the stock has reduced dramatically since March, borrow fees for GME have dropped from 40% to 7.6%. But because the company continues to attract short sellers, these fees may increase. Yeah, and then talks about DRS and how it's been increasing. It's kind of plateaued though, and how that's caused the volume to decrease. Kind of an interesting article. Also, we had an article on barbecue, just with other interests. I think that was after the stream. I don't know. Did we look at that? Basically, Overstock, and Janie and Jack are other interested parties. I can't remember if we talked about that or not. Juice shared it actually on Discord. We've got about 10 minutes. We have time to look at this real quick. Yeah, Global Janie and Jack is bidding to acquire Bye Bye Baby from its bankrupt parent company. Let's see. Bed Bath & Beyond, of course, didn't respond. So they also said Overstock. The company also is fielding interest from Overstock for the intellectual property behind the main Bed Bath & Beyond banner. So that might be just straight buying their inventory. I don't know, because Overstock, I mean, they could just list it on their website. Yeah, under the potential deal, overstock would shut down all remaining physical stores, the people also said. Deal talks are continuing. It's interesting to see more parties that they're calling out here. I'm not sure what, I mean, of course there's not any legit sources. It's just familiar with the matter. So, you know, it could be though. There could be uh, some sort of inside leaks. They're leaking what maybe they want to leak, because these buyers wouldn't necessarily be good at all for shareholders. You know, if they're gonna liquidate Bed Bath and Beyond, that would give us no value. That just depends on what Bye Bye Baby would bring in then. It just got dunked on. Yeah, Jane Jack's private. Yeah, and then that other baby company that wants to buy Bye Bye Baby is private. We were talking about before, the baby list. It was not on your checklist for today. Yeah, me either. I've cash good puts on Coinbase, so might be rolling those for a while. After the stream, yeah. So we can read that. That article is on our Discord if you guys want to read it. Kind of interesting. Janie and Jack is connected to Walmart and Gap. I mean, they sell in those stores. That's what you're saying. Morning, SHF. Yeah, I mean, all these articles, like, they're not saying this is all the bidders. They're, you know, they're just bringing up random ones here and there. Yeah, and a lot of the buyers we've seen on the articles, presumably it would put a low price on whatever they picked up. So, yeah, it might be targeted release of information. Very well could be. But it is getting attention, and I think the article the other day from CNBC, I think that was actually the catalyst for it to move. That's kind of interesting. Let's see what we're at on here. Some fresh lines. So pretty bearish for today. We could get a retracement, but I see we'll see if it's still there, but kind of an inverse cup and handle being formed. I might get a little handle portion of it today, unless that already happened yesterday right here. This bounce. That's likely also. But I don't want to have too much preconceived sentiment on the day, because that's when you get wrecked and are always trying to go a certain direction. If the flow is the other way, you just got to go with it. So could very well be another bullish day, and yesterday was kind of just a retracement of the longer bullish uptrend that we've been in. That's the levels. I mean, we didn't bounce, so that's one thing to note. Like, we're basically closing even lower than or opening lower than we closed, seems like. So after that sell-off, which is pretty bearish, we might have a little bounce and then just kind of flush through that support. There was that cup and handle we traded. That was beautiful. We could kind of still be just in that uptrend, but maybe with a bigger pullback first, kind of like here, because we had that head and shoulders here, and it pulled back, and then made kind of another cup and handle there. So this could be head and shoulders pullback, and just see if it bounces here, or if it bounces and then makes a lower high, and then we make like a head and shoulders or an inverse cup, which seems like we've already made. Kind of on this little bear flag too. I don't like to hold too much weight with extended hours. Yeah. Let's see. Forge is up 20%. Coinbase is down 20%. So that'll be interesting. Very curious how much I'm down on that. Probably 4 grand, maybe more. Barbecue 25 cents was the close yesterday. We do hit this 23.40. I think it'll keep holding support. Can't be certain, but I think it will. GME is pretty much flat. Right. Dude, I've actually gotten that a lot, Pro. It's crazy. That's the only voice I've gotten. No one says I sound like anyone else. Philo still how to make money. It's genius. Alright, Kenny. Be careful, buddy. Don't hurt yourself. I mean, you can listen to me. I can pump you up. I can spot you. 3, 4. Okay, that's enough. Better call it quits. Just like that. Okay, 1 minute. Genzo says SEC stands ready to work with crypto industry to come into compliance. If there is real value in crypto tokens, then SEC compliance will build trust. He said on CNBC, we don't need more digital currency. What? Crypto exchanges are coming along a number of functions. Oh, commingling a number of functions. Uh-oh. Platforms offer web of deceptions with some individuals trying to evade the law. I would hope Coinbase would be the most legit one, but they are not too strong for the rule of law. For the Gensler rule stick, measuring stick, ruler. The suit against Coin. I mean, he's going after all the cryptos, so not too special. But started, I don't know. He was talking about Binance yesterday. All right, it's buy. Retesting low from yesterday, right? Meow. Barbecue up 2%. Bounce that open. 255. 25.50. At least it looks like the chart is working today. See if we get a little inverse head and shoulders. Go along for this bounce off this support. Maybe. Or we just flush through. Big Lots up 7%. Thor up 11. Thor's a RV manufacturer. Microvision 4.5. Is that the one that's had the crazy run? Just, yeah, has not ended. 5x'd. Like 2 months. Yeah, that is insane, that chart. Spy's coming down further. Barbecue 25.20. It's even. Spy's fleshy. GME is flat. Top is up 4.3. Overstock's up 3.4. Have this as a level from the other day. See if we bounce here. Man, we had some good trades yesterday. I just overtraded it and then I didn't take profits enough. We had this bounce trade nicely. Didn't take profits. We had the short up here like perfectly. Took profits but gave it back away, so yeah. Bad. That's not a good feeling. When you trade it well and you've made profits, then you just somehow ended up right on the day. Because of, I don't know, over trading. Probably more than anything. Not taking profits as well. That could have held the shorts come into open, but you never know in the open. It could go either way, and if you're not going to hold through going against you, there's no reason to. Might as well close before you open. Close before the market opens. $25.40 on barbecue. GME still flat. Coinbase bouncing a bit. Still down 19%. Rough. AP is flat. A bullish MACD crossover maybe on IEP today. B is up almost 1%. Little green candle. Yo's pretty flat. Back west is flat. Barbecue up 1.4, 25, 35. Have you guys seen the Apes Together Strong movie yet? I think that's out on Amazon. Haven't checked. New low there on SPY. Kind of just bear flagged on the 1 minute and through. Let's see. If we get a early sell-off. $5.39. Not bear flagging. Four's 11%. Let's see if it stays in this channel at all. That'd be crazy. Be like a little mini GME. BuzzFeed's up 4. 4. Is Jamie still on that channel? Let's see. Hourly's broken. Looks like it's kind of breaking out of it today, breaking down. Barbecue 25.39 plus 1.5. There we go, 25.60, 2.4. Looking at maybe going long on the futures here. I'm waiting for a confirmation of sorts. I like it. Too soon. NRGV is up 5.5. Winnebago's also, I think one of those must have had earnings. Maybe Thor had earnings. Or no. Yeah, maybe Thor did. Moving up Winnebago also. Microvision up 3%. $2,535. 1.4% on barbecue. Up 12. Spies maybe trying to climb here, or maybe just building the bear flag. go. Get a bounce. % on barbecue, hanging out there around BWAP. GME 24.45. Didn't watch it, bro. I lived it. RC's trademark request for bed accessories was approved. For Teddy? Oh, snap. Is that on our Discord? Yeah, I stopped out on my longs. Let it work itself out. See what's happening. Barbecue 1.5 Coinbase. Little bounce. 45. This is kind of a historical support. I mean, not that historical, but just back here. So if it breaks this level, there's not a whole lot of big supports until you get into like 30s. Airbnb's up 2%. Do it. Fill that gap. Binance and Coinbase gone. Yeah, he's going after the cryptos. GitLab's up 25%. Just on earnings. Price target raises. Yeah, earnings. ETOO. Wow, big pre-market. I settled back down. Up 17% still though. Back west is now up 3. Woke up. Nordstrom's up 2. That's right. Camper World's rallying probably on those earnings also. Eyes moving up a little bit. I forgot Camping World has a dividend coming up. Got those bearish plays on it. Their ex-divvy is 613. There's the pump on SPY. Yeah, it's up 3%. I think it still wants to fill that gap. Wait. Wait. Barbecue 25.30. Right at VWAP. IP down 1%. Goes up 1. Back west 3.8. $4.2. Pac West is ripping. Is also moving back up. Yeah, camper stocks are going. And Camping World, of course. Yeah, and there's lots of different articles coming out on the interested parties. You've got Overstock is on the article. Another article has Baby List. Those are just the ones that they're releasing to us. Or not even releasing. Those are the ones that are just being pushed to us by the media. So, but yeah, we share the articles on our Discord. I actually read one of them this morning. See if we get a little cup and handle here on the SPY. GME plus 0.9%. GNS is up 7. That bot was saying Obama's backing GNS or something. It's like, what? They have earnings? I think they reported earnings, yeah. Not bad. Good for GNS. Going down 17%. Slowly climbing back up. This could be long-term bad news for the crypto exchanges, though, and how this plays out. And this could be the start of a lot. Could go on for years, probably. There's a huge battle that's Gensler just basically opened this can of worms. So, Coinbase valuation, finance, all of them. I'd say more risky now for sure. Back west, 4.25. Oh, Neo's starting to drop. That's weird. Who has earnings on Friday? GME climbing up 1%, 24.59. First stock's up 4.5. Nice support level there on Overstock. 17. Got this downward trend it has to break out of, though. Thor 14%. Gap and go. Big Lots is still rallying 12% on that. Kind of a cup and handle there. Microvision, oh my gosh. I mean, what is the catalyst that just keeps this thing moving? You just keep pumping it with good news? Happy day. Hey, werewolf, good morning. Where's a 10% now? Big Lots 13. Coinbase down 15, still kind of climbing back up. Me up 1.5. Put it back into the channel. Not really. But just price action does look like a bull flag there building once more. See what earnings brings. Back west up 4. Goes down 1 now. Airbnb up 2.5. Overstock's up 5. Airbnb's filling that gap. See if it makes it 125. Or is just kind of selling off from its gap. Thor's not bad. I leave Microvision, man. 12.5% on Microvision today. When are you guys still in Microvision? Yeah, maybe show up on time. Oh, burned. And he's in a different time zone. Heartless, ruthless burn. GNS 4.5, I think, just from earnings this morning. There's another one like Microvision, Luminar. Laser. 2478 on GME. What's that 25 again? Up 2%. Barbecue just barbacoating at VWAP 2530 plus 1.2%. The Coinbase's bounce is slowing. 520 on barbecue. Buy's moving up here a little bit. If Overstock breaks out of this, that could be the start of a longer term uptrend. Get up to like 22 or so. There's SPY moving back up. Kitty Daddy. Kitty Daddy's not even premium. Let's see, 10 o'clock. Yeah, GME's pushing back up for 25, it looks like maybe. You guys are at 19 likes, not bad. 10 a.m., well done. Thank you. Thank you for your support. I like it wants to melt up, but longer term I think we're like the hour there, I think we still have to fill this gap and stuff. Got the head and shoulders, we got all the momentum indicators down, so seems like maybe a bounce before that, but they're definitely fighting. Not like yesterday with those barcodes, that was crazy in the morning. West 4.8, 5.25. Good. Laser's now moving up. It's got a gap to fill up here at 7.7. Acer. Big microvision. Oh, 14% today. I know some of you guys were in it. They like closed out around here though. Makes sense. We had a huge rally. It was momentum slowed. This all just gets stemmed from earnings. I don't even see the catalyst. Usual call options. They're making money. SPY moving up a bit more there. Could have held the longs, I guess, longer. Well, I didn't like where I was at in it. There wasn't a whole lot of reason to be in it, so not a good reason to hold it. Whoa, there's a bump on SPY. 14% on microvision. Do it. Back West 5.25. He was kind of selling off 2.8. Buy ripping there. Red to green. Barbecue 25.10. Basically flat. Yeah, GME up 1.23, 24.61. Morning DIY. Hey Molava, morning to you. We read a little article this morning on GME about what analysts were expecting, and it seems they're not pricing in all that bullish just from last quarter, since that was a lot of that was just selling out of inventory. So seems like they're kind of pricing that as a just a 1 quarter deal, unless if they continue to sell out of inventory and not replenish it, or unless they have had some big boost in revenue. But yeah, so that made me slightly more bullish for their earnings, because analysts haven't priced in much for it as far as the expectation. Buys ripping here, little inverse beta on barbecue beta. So we had, yeah. Big lots 18%. Little bounce there. There's a little dump there on SPY. Barbecue, break even. 25 cents even. Maybe you kind of got a little flushy there with that. When I don't do extended hours, looks like we've got a cup and handle here on the 5-minute. IEP sold off too. What the heck? Wasn't this up 4%? I'm looking at 4% difference? No. No, not IEP. Never mind. IEP is now green. It was red. Up 0.7. It was Pac West. I was looking at 5% up on Pac West. Oh, Neil's flushy. 4.5. Coin still trying to bounce a bit. B almost 3%. Lots of recovery. What are you recovering from, Tree? XXII is up 5.25. I'll say it's might be bull flagging now on the 5-minute. Provision 15. And I'm moving up out of this bull flag now on the SPY. 427.75 area, which was extended hours support. That support from yesterday also. See if that acts as resistance. Everybody's still climbing back up. That's good. Barbecue, barbacoating, back to break even. Lucid's ripping. 1.5% DIY. You must like this stock. Actually under average volume the last 3 days. Showing 6.4 also, not 4. Barbecue 24.88, down 0.5%. Microvision 21%. Big Lot still 17. Thor 14.5. XXII up 7% now. Any rip. I say you must like the stock. I have lucid puts. Doesn't matter to me though. They're we've got, let's see, got 227 days on them, so barbecue back up 25.20. Be pretty flat. Goes down 4. 20 is down 14. $25.25, 1% of barbecue. Microvision 25%. Broken that high. $6 busted through there today. Was a pretty big resistance, it just blew through. 692 is next. Then like 10 bucks. Jeez. Yeah, today was building up pressure for that break of $6. Did it. The vengeance. XXII up 8% now. Good set of resistance. Sorts. Overstock 7.25. He's a little bit green. B&B 2.25. US 7.3%. Bank is still volatile. Eyes moving up here a little bit, see if it breaks this bull flag. GME is up 2%. 481. Back into that channel. China is likely to see its COVID-19 wave peaking at about 65 million infections a week toward the end of June. Browser's starting to lag again. Like quit for a bit. I updated it. Wants me to update again. I was a couple behind, I guess. Dip motion delayed from today to June 14th. Oh man. Wow. Did that just get released this morning? I have an inverse head and shoulders here too on the 5-minute. This could be the double top of kind of this handle, this cup. Also, I'll just have to see which way it goes from here. Hey Lords. Hey Lords. Liz later provided trying to commit. Yeah, I mean the dip, that's like the financing, so I guess that's related though. That seems a little unusual. Good to hear, Lords. Barbecue coming down a little bit there. 24.78. GME up 2.3. IP's now up 1. Neo down 4.5. Coin still kind of trying to climb. Airbnb moved back to VWAP. West is up 6%. Microvision 25%. Consolidating above VWAP. Big Lots is 23%. Still on this escalator up. Overstock's ripping also. Almost 10% on Overstock. Breaking out of that wedge. But you gotta give some margin for error because we might say it's higher up. That is looking pretty good. Sometimes Happy doesn't play it. I'm sad. Hey, Daniel. Yeah, I'm chilling on it. I'll roll it if I need to. I'm down 84% on it. Sorry, 144%. 84% today. Yeah, it came down quite a bit yesterday too. Like I opened it, got filled somewhere here, and just kind of kept selling off. I didn't look into it enough with the Binance and everything. Should have looked into the news because I probably would have seen the reason it was selling off yesterday, I think, was from Binance. I mean, GG moved quick, literally from Binance straight to coin the next day. We'll see. I think I'll be alright. I'll roll as much as I need to. It's actually showing pretty good resilience this morning, even how it's bouncing, not just selling off during market hours. Breaking out of the bull flag. One started covering on GME. Not considering volumes. Not sure. Very slow covering if so. SPY ripping there. I mean, it hasn't really seemed like someone's been covering this without mellow and slow and low. This price action's been with this volume. But we don't have a whole lot of signs of huge amount of short interest either, like a lot of shorts that need to cover. low borrow fee. I haven't looked at the FTDs, but nothing like they used to be. Reported short interest is low, which, you just kind of combine all these things. It's all kind of limited data, but kind of give you an idea. I mean, the price action would indicate also that there's not a big short position that's having to get rolled over. I mean, they can cover with low volume, they just are covering slower, just not covering as much. All in? Yeah. I didn't quite get the hype on Mullen. Everyone seemed to get crazy hype bullish on it for some reason out of nowhere. Not sure. They had the reverse split, which is usually bad. They didn't really get a reverse split squeeze or anything. I mean, it still could, but it's lost over half its value since then. Microvision, almost 30%. You made 3%. IP's green now 2%. B&B, Airbnb bounced off of VWAP. It was bouncing up to VWAP, still down 3.7. Coin slowing down 14.25. Nice to see there's some buying pressure this morning though on it. Pretty good volume too. 27 million in the first hour. I'm ripping up again. Or 28.39. We are retracing the losses from yesterday. Little inverted head and shoulders did end up playing out. Head, shoulder, shoulder, and there's the break of the neckline. GME climbing along. 3.3. 3.5. West 7.5. We can break that $8 on Pac West at 8.11. High from the other day. Break out of this bull flag on it. IP's kind of at a top also. AI is up 7. Is gap filled yet? Almost. Gap is almost filled on AI. Hoping that's the top once that gap gets filled. Still positive on my shorts, but just barely. Microvision. Trying to break out there out of that consolidation. 28%. Big loss continues to escalator, 28%. The battery tech, yeah. That just that doesn't mean it's gonna be a profitable or good company, run well. It would also be reflected in the share price. Down 72K on Mullen? Gosh. Big lots. I told me it was around a 20. Only had 6. Not in it. Yeah, I've been watching Mavis for like weeks. You guys were in it, playing it. Told that I have herpes. I will hit all-time highs. Attached to the spot. Gonna beat tomorrow? Yeah, analysts. They might. Analyst expectations on it aren't that bullish. Actually, they're still kind of holding on to last year's numbers. Pretty much anabolic. Coin still kind of grinding up here, not bad. Neo's bouncing through VWAP, that's good also. Green B consolidating at the highs. Back West still rallying. 7.25. Overstock's 11% now. Yeah, this might be the breakout on Overstock. If it comes back and finds support at a higher level, some higher support, confirm it. If so, that'd be a great long. Big Lots 32% now. This thing's almost doubled in the last week. I think this still plays out. Love his head and shoulders too on the hourly. Barbecue 24.97. Flat barber coating right on VWAP. GME up 3%. Starting to slow down. IP started ripping. 3.5. With some volume. Neo's climbing above VWAP. I'm not sure where Ace is. Probably stuck on the border or something. But Coinbase wants to keep climbing up. Yep, Coinbase is starting to move now. IP just melted faces there. Mac West almost 10%. These are all ripping today now. I kind of bull flagging. Positive it's a beat. You mean? Big Lot's still going. 33%. Ace is Amish. Yeah, he takes his buggy across the border. CEO bought 51,000 shares. That was 3 days ago. Yeah, that's kind of what set this rally off. The earnings, potentially, and then insiders buying. Now you probably have some shorts covering. Must be. EDN up 10%, 9.6. Birds up 8.5. AI, did you fill your gap? Pretty much. IP 3.5. It was kind of pushing up again. Tried to get in some cash grid puts yesterday on plug. Would have been good, never got filled. AMTX, I think you guys have mentioned this one before. It's up 6x from its low in the last few weeks. DocuSigns had quite the rally. Get a resistance, break that, and probably see a gap fill up to 64. Upstack's getting a pre-earnings rally. Base is up 5%. We'll bounce off that support. Did reject right at our line though. Look at that. After this last rally. Respected that trend. I think some of you guys were long on this, and I like, well, we mentioned it this day, but it actually did sell off from there. Just wedging now, bouncing around this 330 level. See if it rejects again. It'll be a lower high if it does. Big lots 33%. GME 3.5. Grouping some of the losses from yesterday. Barbecues flat. IP broke that resistance. A pretty big level to break actually. We're fighting with this one back here before that gap down. Yep, MACD did cross bullish today. We'll see if that sticks. It didn't yesterday. I'll have this macro RSI divergence on it. Burgundy. Wait, like you think you should just scale? Scale. Like we were saying yesterday, I still think that's probably going to be around your best price. This 2340 has been a solid support and resistance. So, yeah, you put some in here. You could wait, see if it comes down here. Put some in here. You know, put a lot more in here. You know, like 20% here, and then like say 50 or 60% here. Wait and see what happens. However you want to do it. Not a big difference though, really. Here to here, I mean, talking what, 5%? Oh, not a huge deal. However, if it breaks here, that's the thing. If it breaks this level, then no, we don't know how far down it'll go. $21.46 maybe. Next major support after that though is $17.90. Yeah, I'd say like $17.90. So want that to hold for this uptrend to stay intact. Could buy it, Cameron, just like sell cover calls or something. But that's not a huge arbitrage play on CAR. I think Twitter's was bigger for a while. 33% on big lots. Maybe it's kind of sold off there. Still up almost 20. Coin 12.8, still climbing up. IP positive 3.5. Go climbing back up to down 1.5. West 8.7. Guys up 8. I think that gap's actually filled now. Probably close enough than the margin. Fair. Camping World's ripping 6.25. Come on. That from Thor's earnings? Sorry, it was me. must be. Oh, they had news yesterday. Camping World set to acquire Roy Robinson RV Center. Or a report of proposed sale of securities. Hold on. Barber coating, 25 cents. Up is up 9.25. Has a nice RSI divergence on it. Making its third. Don't usually see more than 3. Sometimes when you see 2, usually good enough. Sometimes you'll see 3. The daily especially, so this probably is due for a bounce. Up 3.25, 25.10. Messing around with it up there. Messing around with that $25 while barbecues messing around with 25 cents. Why might do the same thing here again. Get a bull flag breakout. Starting to wedge down on the support. So he wants to break out the other way. Breaking the wedge to the downside. $31% on big lots, 20 on microvision. Iran's embassy reopens in Saudi capital. Morgan Stanley chief U.S. equity strategist has said he isn't convinced the stock rally is here to stay. Remote work is cutting New York City office value by half. Liechtenstein.
It signals the end of that bear trend to the downside. I want to just kind of zoom in on this run-up that we've seen as of recent because it has us back above the 50-day moving average, back above the 200-day moving average. Google up 44% year to date. I mean, a nice run. You can see that area consolidation that we're breaking out of right now. So it's up to the bulls to do the heavy lifting at this point. Higher highs and higher lows, energy, participation, follow through. That's everything you're looking for in this recent move higher.
Yeah, all right, thank you for that. Yeah, we see the trend there. Thank you, Ben. Last but not least, Berkshire Hathaway, which actually has a lot of Apple, had a lot of Coke. Let's see, Occidental Petroleum. You know, all right, so tell us about Berk B, which became a little more affordable than the Berk A shares. What are you watching here, Joe?
Yeah, just thinking about the breadth in the market, we're starting to see that improve. We know the start of the year was all, consolidated into the top mega cap stocks. I'm thinking if we're starting to see the rest of the market come along with this technology, we're going to see companies like Berkshire Hathaway do quite well. I'd like to see that for the market health in general, for the economy health in general, to see more gains in the rest of these stocks rather than just the big cap tech stocks. And I think there's good reason to think so. And also, this is
Coming
a
down
better
here.
spot in the financials department for me to hang out with. The insurance area is going to do better than the banks right now.
See what happens at VWAP.
Yeah, I'm just looking forward for the next couple months to see maybe some catch up from some of the staples names like the Cokes of the world, the McDonald's of the world, like you mentioned, to catch up with the tech stocks over the summer months while tech
There's
kind
VWAP.
of waits out for that fourth quarter to see their next direction.
Yeah, and it was interesting because, sometimes people run to utilities and staples as sort of safe havens during a worrisome time, and those really underperformed, to your point. Ben, Berkshire Hathaway, please.
Yeah, so far, guys, we've taken a look at two stocks that have been trending higher. This fits right into that conversation as well as we look at the price activity. What I went ahead did here was just sort of directed our attention to the high conviction trade to the upside that we saw end of March into beginning of April, and then how since the beginning of April we've been a lot more sideways rotational. This really speaks to what I look for. It's a pretty good example of the two phases of price development, and here you can see in terms of, as we look at this, again, big move up here. We're talking from 290. We lose that momentum to the upside after topping out at 334, 333, and we've been really sideways rotational since. We'll go back to middle of April around 325. Now, as we step away from the hourly candles, I wanted to show you what's going on with the 4-hour because here we have a longer-term trend in play as well. Pretty well defined also. Areas of consolidation that continue to form at higher and higher levels, 271, 288. Now that we're forming this area balance around 325, we're referencing 309, right? The bulls don't want to see us back down below that because that's a major flag flying. If anything, they want to see a breakout above 334 and a new area of value forming at a higher level above 325. Let's just take one more look at shares of BRK, and I want to point out where we are relative to the 50, the 200-day moving average, holding above, not as convincing as some of the other participants that we're watching, which are extending this rally here. The one thing that has me a little bit concerned here is RSI is somewhat limited in terms of participation. It's got quite the ways to expand before we could see something in terms of real energy and follow through with price to the upside. But look at this, shares are up 7% year to date. So yeah, maybe it has some catch up to go, to Joe's point, but still a bullish narrative here, talking multiple time frames trending higher.
Yeah, and I think all three of these charts, they're pretty happy charts overall if you're a shareholder. I know you mentioned RSI pulling back a little bit, but overall, making us feel pretty good here with these charts. Ben and Joe, with your talking points, final thoughts, Joe Tagay.
Yeah, so
head and shoulders being built there on the 5-minute.
Five,
head, shoulder, shoulder.
The market's up so far this year. Technicals are looking good.
So this would still look like a inverted cup with a handle on a longer time frame.
there's going to be that potential for that next week with the next Fed meeting. Of course, anything can always happen. We're always watching out for that. But, you know, at the end of the day, we just have to stick with what the economy is doing, what the charts are telling us. And right now this year, it's been a good year.
All right. Thank you. Good to see you both. Ben Lichtenstein, of course, on the charts, and Joe Tegay, Rational Equity Armor Fund. Thank you both for the big three. Good names there. Coming up next, let's spotlight online travel and mobility. The summer travel season is here. We can look at names like Airbnb, Booking.com, Lyft. All right, we got you covered here. What do the consumers really want? Next on Trading 360.
European market just closed. That was weird. I think that's what that little pop was from even. Up in store for up. Maybe. $24.93 on GME. Up 2.5. IP took a sell off with that move on SPY. Same with Airbnb. Same with Coin. Back West held out. come talk to you because they miss talking to you. I mean, Lords, like I said, I'd just scale. Get some here. This has been proven to support though, so I don't think it's coming to 20. No. But I do think we could still retest this level that we hit yesterday. I think we'll probably be going up before we break this 2340. Basically. Like, probably retesting the 30 cent before we break the 2340. That's my opinion based on the TA. I don't know any how any news will affect it though. What is 25% between friends exactly? Yeah, I mean this move from here to here is only 5%, so not a whole lot. Now if it broke this level, then I would consider maybe closing. But that's kind of the way I'm seeing it. So I grabbed the short on the ES on this candle. I didn't close down here. I just don't like to, because then I don't know when to get back in it. See it head and shoulders. See it inverted cup and handle. I want to try and figure out how to get back into it. So I'll just hold. Nice thing about futures, you don't have theta decay. Okay, I've got out of my Neo exposure. Hoping for a bit more of a rally before earnings, but not so much. Still have a nice RSI divergence. Chart still looks bullish, but it's just waiting on earnings, it seems like. No pre-earnings run up. Next profit I'm looking for is closing IEP. Reopening on maybe a red day. For that, Airbnb. It's actually good how it came down and retested. It's holding support there. It's pretty bullish. That happens to BBBYQ also. I like to see this support hold, breakout, and retest of the breakout. Barbecue 24.95 down 0.2%. Buy, still building this head and shoulders now. Short the futures. And Matt kind of broke out there, 17%. Lucid. Well, they just raised a bunch of capital, so good for the company because they need it. But I'm bearish on pretty much all EVs in the long term. Not long term, but all these ones that are trying to compete with Tesla right now, I'm bearish on. Other than the legacy brands. But all the all the Rivians, the Lucids, maybe not the Chinese ones, but all the American ones, other than Tesla and then the legacy ones, fundamentally. But as far as the chart, I mean, it bounced pretty nice off that support, that $6 support, and there's a gap up there now, so could go long and just set a stop if it breaks below that. Buy, bouncing up, crushing my head and shoulders dreams. But yeah, I've puts on Lucid actually. Trying to get exposure to all the EVs. Long term bankruptcy plays. Yeah, Mullen's another one. I mean, literally, there's like a ton of them. How many new auto manufacturers have made it in the United States in the last 50 years? And then how many new ones have we seen come out of the woodwork and IPO and SPAC in the last 3 years? Based on new technology and something that's not been really proven. Brands that have no recognition. Tesla was an outlier, and a lot of that was because of our tax dollars bailing them out and basically paying to keep that company afloat until they can figure it out. SPY's climbing back up here. Should have taken those profits. Crazy. Virgin's up 10%. Like news on this. Virgin has a bunch of patents on haptic feedback stuff used in like cars and I think even on phones and stuff. Good SPY ripping, wow. Had it my long term for a while. I don't know if I still do. Remember. Maybe just on some patent thing or something. The volume on it too. Barbecue, little flush there. Thanks, Lords. Thanks for your sacrifice. $24.52 down 1.9%. Someone needs to do a DD. Hedge funds recorded the biggest outflows of year in April as investors pull 11.57 billion. Yet the market ripped in May. Beijing reports 2 monkeypox infections. Isolates patients. Biden administration will strike electric vehicle proposal from final biofuel quota rule when released later this month. Biden administration will also remove up to 1.8 billion credits that electric vehicles are expected to generate over the next 2 years. CEO pay has increased 1,322% since 1978. 25 richest people in the world, 200 billion poorer than last year. But still worth 2.1 trillion. Remote work is cutting New York City office value by half. Russell 2000 hit close to a 3-month high. Diablo 4 sets new record as Blizzard's fastest selling game of all time. That's crazy. That just means Blizzard doesn't have many great games. No, that's crazy. Diablo 4. US had intelligence of detailed Ukrainian plan to attack Nord Stream pipeline, according to WAPO. 10 U.S. states, led by California, are taking legal action against Coinbase for violating securities laws. Illinois Attorney General says. And yet Coin continues to rally out of that dump. Overstock 13 order. Dollar General customers are increasingly looking for items at or below the dollar price point amid economic slowdown, said the CEO. Excuse me. First game in years. I think I played like Diablo 1, maybe 2. And at the time it was cool. that game, even that style game, just doesn't seem appealing at all anymore. At least, I mean, it's not to me. It's clearly still a lot of demand though. Neo climbed all the way back up almost. Almost green on the day. Back West holding 9%. Barbecue 24.50. 2%. With Dave Chappelle? Yeah, I know. Played some of the MMOs. They really get you sucked in a long time. Can't remember when I would have played. Let's see. I don't know. I haven't played any of those new ones though. Yeah, maybe it was a Star Wars. First one was like 20 years ago. Probably when I played it. Star Wars Galaxies. Moving up there. Too high on the day. See if we're getting a double top here. Maybe a little cup and handle forming. Or Bantha with a saddle killed my leg stripper. I love the simple game mechanics. Mammoths can evade lasers. Science. Also, gaming used to be for the kids. For the kids. And then those kids grew up and now we have critical adults trying to game. Kids don't know. Of course mammoths can do that. Did it in the game. Netflix could add as much as 9 million paid subscribers thanks to the password crackdown. Blinken poised to travel to Beijing for talks in coming weeks. Over a third of Americans reportedly had more credit card debt than savings. China is likely to see its COVID-19 wave peaking at about 65 million. 72% of Gen Z plan to buy a home in under 6 years. Coinbase Global Inc. says we'll continue to operate our business as usual. Coinbase SEC's reliance on enforcement-only approaching is hurting America's economic competitiveness and companies. Average Canadian house price rose to $716,000 in April, up by $100K since January. German Chancellor Scholz on broadcaster. I've not spoken with Russian President Putin for a long time. Barbecue down 2%, 24.52. Up to 24.78. Kind of bounced it up 2.5. Coin's still climbing up. Only down 11% now. Back like 10%. P positive 3%. Bouncing off that support. Love VWAP, that's good. Bullish. Mac West starting to come down. Neo is now green on the day. I feel like Neo does that. Could have held those cash grid puts a little longer. But I came out with a little profit. Better to take the risk off before earnings. Up is up 10%. Basically measuring it. What's wrong with the lawnmower? Sounds like you've been procrastinating for 2 days. Eyes coming down there. Maybe double top. Okay, the other membership level on YouTube is now published and active. So I'll be sharing all my entries and exits, the strike expiration, what I get filled at on the theta farm. So more conservative approach to basically farm an account, slowly grow it, 10% roughly a month, which is pretty insane of compounding. Yeah, double top there on SPY, but we'll see. Hey Trace. Breakout imminent? No, I don't think so. I think it's imminent. Even on barbecue, like, I don't think it's imminent either. I think it could happen. Barbecues probably need a catalyst, fundamental catalyst. GME, it's possible. It would also, I think, need a catalyst, and not just earnings. I think an acquisition or something that would be very surprising. Really depends on how you define a breakout. They could. It just depends on how they chose to run things. Honestly, I don't think it's because it'll be crazy revenue for Q1. You know, their NFT marketplace and all these new avenues they have for revenue really haven't started generating much at all. So if they are profitable, it's just they're just selling through inventory, not replenishing it. So just depends on how they want to push it. If they chose to be, that's fine, but at some point, you know, they're gonna have to make money without sustainably. They're gonna have to be spending money to do it. So whether they did that or not, I don't know. I feel like last quarter was That's probably a smart thing to do. I don't think they were doing it just to, I guess, pump their numbers. If they do it this quarter again, then yeah, maybe they're doing it to pump their numbers. But that said, I think they could maybe still beat analyst expectations, just not by much, because the analysts aren't expecting more than basically what they've been doing year over year. So they're kind of negating last quarter just because that SG&A. Neo's back green. Okay. Yeah, I think it's usually their slowest quarter, and Q4 is usually their best. So, definitely something to consider too. That's just considering positive EPS. I guess I'm just saying compared to what analysts are expecting, because that's really all that matters, right? I mean, I guess fundamentally you could say, oh, looking at it, but as far as a reaction from the earnings, it's going to be according to what the analysts have. Since we don't get any kind of news on the earnings calls that causes the stock to move, it's going to just be from the numbers and how they vary from the expectations. Well, 15. We're at 34 likes. Thanks, guys. It's Tuesday afternoon. Like that is a song. Tuesday afternoon. Tuesday by Barack Eater. That song's kind of sick, actually. Listen to that off stream. Rock. Alright, we maybe have our cup here and our handle, our inverse one. So, confirmed again by this double topping up here, not breaking out. Right, yeah, they compare it year over year. So yeah, that's where it could be a little better than Q1 last year. However, that really depends on GameStop and how they chose to run it. If they're still just kind of selling through their inventory without replenishing it, then yeah, it'll beat the expectations, because analysts aren't expecting them to do that based on, I guess, that article we read on what they think for EPS and revenue. Well, I guess the revenue wouldn't really be increasing, but the EPS would still be better than normal. Hi, trader. We need to see the revenue increase for those positive EPS and positive cash flow numbers to sustain increase. But revenue was actually down, which makes sense. It's not like a bad thing, but revenue was down for Q4. Down a little bit year over year. Good, we haven't even gotten Gen I. Gen A. Hey, Julian. Good afternoon. Day's going swell. Gary Gensler's going after Binance and now Coinbase. Oh, that was probably the biggest news of the morning. Big gap down on Coinbase from that. Is building a handle, I think, an inverted handle. This cup. Have the head and shoulders already. Hourly there. BBBYQ is down a little bit, pretty much flat. 24.69, down 1.25. Still holding this 23.40 level, which is good. GME had a little rally up above 25, and now it's come back down. 24.77, up 1.9, but it's back in that channel.
Even stronger. This stock, the performance, insane. The last several months since the low was hit on November 3rd, $213. It's up about 120 bucks.
Yeah, DNA's been having a good good rally.
This isn't a new phenomenon.
Point is up 17.
Microsoft's been probably looking at AI in some capacity for as long.
Yeah, this one might take off.
Technology has existed, and
I agree with that.
They end up picking an investment in OpenAI that did ultimately come up with ChatGPT.
Dude, it is an awesome trend.
Just happened to be kind of the next big thing at the early parts of this year, but its use cases and the sort of arms race that's unfolding.
I think as we continue to hold this support, we could move up at any time, back up to 30, and hopefully breaking that high.
Extremely successful company, even if it never even sniffed AI as a concept. And so because of that, they're able to be one of the primary players in this space from an R&D standpoint. And this is what we
but by this time, we were already expecting quite a bit of news, which we haven't gotten yet. So that keeps getting delayed.
The good fortune, because of how much money that they make in their core businesses, to spend a lot of money trying to find other things to make them more money. And it's just sort of this never-ending cycle of, a lot of good decisions in the last 30 years have allowed them the opportunity to make some mistakes right now and ultimately benefit from that kind of, try to create and break things along the way. Just because you go on your email or your
I think this pump was probably just from that news. So if you take that out, it looks like we're just consolidating after this rally. So looking for a new high on the next rally, which might not start till next week or end of this week.
So I'm excited to see where it goes.
Every significant part of what we talk about, like cloud computing, right?
I've traded ABCD a little bit.
Azure is number 2 and start
and when it works, it's really cool to see. I haven't traded enough to have enough experience, but I guess my struggle with it was
this company is in everything significant, and they are a major player in all these significant parts. I think
I just haven't traded enough. It's worked for me a couple times, but sometimes I think it's an ABCD and then just doesn't. It hits the retracement and then it just kind of chops around. So you can't just use like one TA, one tool, you've got to use a lot together and kind of then formulate it. So when I've used it, maybe I haven't looked at it with the longer term trend, what's going on, and if you have the right longer term trend with it, maybe it's more reliable.
It hasn't really moved the needle yet. That's the key. We are in the early stages of this, and it wasn't until the launch of Chat.
Nice, yeah, the chart looks really nice.
Really just a couple of months ago that people started really paying attention to this. Obviously, as
220 is your cost basis, or that's what you have for price target?
Certainly, the other big players out there, whether that's Google, whether that's
that resistance there,
whomever it is, have been paying attention to all of this.
Seems pretty plausible.
It really didn't come to the visible to all of us as consumers until this Chat GPT launch. And yeah, it's cool, it's whiz bang. Where are all the applications? I mean, think about a company like IBM, and they've had these big, massive computers that were supposed to change the world in terms of AI that never really amounted to anything because it was just really hard to figure out how you could apply that to your
FIE
business or to
moving
your
up
daily lives. And I don't think we have all that.
25%.
I will go on record right now
Oh,
saying
it's your average?
this
I see it going up to that too.
advent of
The last
AI,
resistance.
maybe not
You
in
just
its current form,
you buy
is
it on the way
going to
down
change
or
our
on the
lives
rip
over
there
next 30 years
at the
as
top?
significantly as the internet itself has changed our lives in the
About
last 30
2470
years, which
lords.
is really about how long it has been around.
Slow down.
So
Slow down. You already had your purchase up here. Slow down.
Just about 30 years from now. I can't even imagine that any of us would have fathomed that we could
I'd try and do
change
like
our garage door
one
and
purchase a day for
or
3
deliver
days or
packages
4
to our
days or
porch,
something.
change our thermostat or
And then
date or
change
shop
that if it
or
breaks
go to
out to the
doctor
upside.
or pay our
You know,
bills
then
online. If we could
put
have
it all
thought
in there.
about all those things that we are
Get a
doing
break.
now, back then in 93.
Or if it breaks out the downside, stop.
There's just no way.
Wait.
And I think we can't even fathom the
Or
things
close.
that we might do over the next 30 years. That doesn't mean Microsoft's going to be the key player, but they're certainly going to be a player without a doubt.
Randy, you have a trade force in Microsoft that the interesting thing about it is your long side of this call calendar, Randy, is 73 days from expiration. Tell us.
Yeah, I know we talk a lot about very short-term trades on here, but sometimes I don't think it always makes sense to do that. And again, this isn't my opinion, but I think to give examples, it's helpful to give examples that sometimes there might be trades that maybe you need to do over a couple of 2 or 3 months. Because we are in the middle of earnings season, as we talked about.
Yeah, I try to trade. Sometimes I get lazy or too excited.
Microsoft, as you said, it's had a great year.
But yeah, I like to look at all the time frames and then work it down to the real micro for when that reversal happens. Even down to the 1 minute. I've been looking at the 1 minute a lot more on SPY, just for like intraday trades and scalps. But it'll probably carry over into my trades and other stocks.
We are literally at an 18-month low on the implied volatility, which makes long options relatively cheap.
You believe in the company? Well, then you're set.
Very low vol. That's generally the time
Yeah.
you want to think about buying long options as opposed to selling option premiums because they're relatively affordable. But if you go out that far, they get kind of expensive.
220. Yeah, I think you could. It's got a pretty clear runway to make it back up to your cost basis if you did want to exit. Then it's got that gap at 230.
It hasn't shot up. It's trended.
You want to exit and reevaluate how you enter stocks.
If you believe that trend is likely to continue going forward, well,
But if you like it long term, then whatever. If your plan was to hold it for 5 years or more,
in the very near term, but it might reach it a couple of
good.
months out. So I put together this calendar spread where you would sell the near term, and that's the June expiration. So that just out on the 16th of this month, not too far into the future, at 340. So that one's about $7-8 out of the money. And then buy the August 18th 340, which is after the expiration. Which is after the earnings report comes out. What that does is bring that cost of that one down. So what you're essentially saying is you think that perhaps Microsoft will trend higher, but it probably won't reach 340 before that June 16th expiration. But then if it continues to trend over the next month,
Afternoon, Jay from the Bay.
Go not only to 340, but maybe even
Afternoon, sir.
This brings the cost of this trade down from about 13.
Give me 24.78.
So that means
2% green.
Is your cost of your trade, which is about 10.
Microvision's been an exciting one for me to watch.
If you thought this thing was going to ramp up even faster, you could.
Thing got a huge move today. Wow, hit 7.2.
July rather than August. If you didn't want
that was that my level? I didn't mark it. Let me see.
This trade, the way I set it up is that once you get past
I
that
was
June
above it.
expiration, if you're right, and Microsoft has not exceeded 340, then that June just expires worthless. You could then add a
6.9.
July at that point and further reduce the overall cost of that August contract at that point. So this one's got some sort of built-in potential management along the way, even though it is kind of long.
Look at that volume today on it too. 20 million. Today was the biggest day on it so far.
The current IV percentiles is
Holy.
0 in Microsoft. And Randy, this trade has about 40 Vega in this trade. So for every point implied volatility were to recover, this trade gets more and more profitable, Alex.
Yeah, I think the logic is sound. I think that he laid out sort of the game plan in terms of the kind of the active management that may be required with this. As it stands, it's modestly bullish. Obviously, it doesn't have a ton of room to the upside. But because of that, it is a little bit more of a volatility play. If all else is equal, and for whatever reason you start to see volatility swell in the overall market that leaks into something like Microsoft, this is a trade that may stand to benefit. You can see it does best at the strike, which in this case is at 340. But 333, where we're at right now, given the time horizon on this, is likely close enough
that's just a little bit of volatility boost here in this one. This one could be profitable marginally without even getting an upside movement.
2.5% over stock.
I've made money in my career trading a calendar spread where it goes past it and then comes back to it, right? The ebb and flow of the market makes it more profitable. And if you get that uptick in implied volatility, the Vega kicks in on a trade like this. So
got options on here.
The more Vega you want,
got some liquidity too. You could sell covered calls on it.
That long date further and further down the page.
You want to just keep holding it, you can just sell like at the money covered calls once you get up to $2 or so.
As always, that's Randy Frederick, Managing Director of Trading and Derivatives at Charles Schwab. Always great to have you on. Thanks, Randy. All right, we'll take our second break of the show and come back with our cash tag segment. Yep, timely. They're going to talk Coinbase and all the data surrounding Coinbase, and then we'll trade it. Take another break. Come back with more Fast Market in 2 minutes. See you then, everybody.
Sales of Bud Light decreased 23.9% for the week ended May 27th. During the first quarter, AMC food and beverage spending per patron was $6.90 globally and $7.99 in the US, up from $6.46 and $7.52. The Fed shouldn't sacrifice the economy in order to reach its 2% inflation target, says Moody's chief economist. Some U.S. banks are preparing to sell off property loans at a discount even when borrowers are up to date on repayments, a sign of their determination to reduce exposure to the teetering commercial real estate market. There's no evidence yet of a sharp slowdown in the U.S. bank lending, according to IMF. Kristalina Georgieva. That's fun to say. Kristalina. JP Morgan's Jamie Dimon to meet with group of U.S. House Democrats. $24.60 on barbecue, down 1.6. Liking this breakout and hold support on IEP. I think I'll hold these contracts a little longer.
Just to give some level of confidence. It comes after we see a Ponzi scheme run worldwide and in the U.S. that no one knew was happening until it collapsed in FTX. And so after both of those things, and 2 years after approving Coinbase's business model when it filed for its IPO, the SEC now says, no, you're actually an unregistered exchange and brokerage, and we're going to sue you for that. It's really ironic to me that they would do this. I think the timing is very suspect because what we're seeing at Likefolio is an absolute rush of people moving into decentralized finance.
Yeah, they're
as a
scared.
result of what they're seeing at these regional banks and these collapses.
Dude, this guy.
The movement of people towards DeFi and crypto in general has been substantial, and we think will continue to have legs. We don't think that the SEC's action against Coinbase will do anything but further fan these flames, because quite frankly, it's becoming very, very difficult for people to have the level of confidence that they once had in traditional financial and banking organizations.
Andy, points taken.
Listen to the tin on that guy.
Pretty clearly, and sort of where you stand, how many feel.
Put a smile on my
when
face.
It comes to Coinbase in particular, though, I've always kind of scratched my head a little bit at the concept. Obviously, the pitch to a Bitcoin and some of the other coins is the decentralized nature.
There you go, Lords. Yeah,
Going to an
1 week at a time.
That's kind of combining all that inherently is centralized, right? So how do we bridge those two pieces at this point with all the other kind of
Also, the SEC's timing sus.
with some of the key players? It is kind of the only game in town. There's a few other
Yeah, that's not bad at all, Lords. You bought when he bought.
But how do investors, those who are into this sort of decentralized finance or
Must be
alternative
way too
finance,
heavy.
feel about Coinbase and the exchange players that still exist?
Yeah, I think the big difference between Coinbase and a lot of the other exchange players is a lot of the exchange players are kind of fake in that you really can't withdraw the Bitcoin or the cryptocurrency itself, whereas on Coinbase you can get that into your cold storage wallet.
Yeah, they're actually holding it.
Reflected in Coinbase's happiness level with consumers when they compare it to Square or PayPal or SoFi. We're seeing Coinbase accelerate levels of consumer happiness over the past year in ways that the others simply have not, because a lot of those you are tied to the success or the failure of the exchange itself rather than actually owning the decentralized currency. So I think that's really the big thing. I would also say that a lot of times historically we have seen like with Microsoft in the past after its antitrust lawsuit many moons ago, we have seen these types of actions by the SEC or other regulatory agencies actually create a moat around these companies that they attack, because it becomes extremely hard for startups, those raising capital, to go up against something like the SEC. Coinbase is in a position to do it, and if they get through it, which I think they will, they're likely to come out on the other side as an even stronger monopoly in this growing sector.
Chairman of the SEC, Gary Gensler's statement came out today. Despite being subject to securities laws, Coinbase commingled and unlawfully offered exchange, broker-dealer, and clearinghouse functions. So this is going to be something that probably goes to the courts. But I understand what you're saying right there, Andy. I think
back down to VWAP. Barbecue bounced up to VWAP.
Literally
inverse beta right there. We see it. Sometimes it honestly, it's on.
They're basically close to a monopoly, aren't they?
Yeah, I really think they are, and I think the fact that this company's been publishing quarterly
below VWAP now,
income statements with relatively high levels of transparency, something that a lot of other so-called exchanges simply haven't been able to do, capable of doing. I don't see anyone going out of their way to fund a new Coinbase competitor while this is in the courts. So I think ultimately Coinbase comes out ahead because of this, but the pain in the near term is very, very real.
All right, Andy Swan, I want to thank you for coming on, as always, spending some time with us and being that lean and agile data guy that we need on this show. Have a great day, Andy.
You too, thanks.
All right, Alex, you looked at this. You know the data from Likefolio, how popular Coinbase is, the overall trends toward digital currency. How do you trade this, though? Let's take it from the theory and the argument about Coinbase to the trading part of Coinbase. What do you see here?
I think that they're intertwined, particularly because I think someone who gravitates towards decentralized finance probably doesn't care that much about the
You either
SEC
believe it or you don't, right?
And so because it's so hyper-polarized, the reputational damage that often
Matt's up a lot too.
Buy something like this, I'm not sure applies to the same extent as it typically would. That being said, right now there's uncertainty, and what does uncertainty mean? It means elevated implied volatility, or at least increasing implied volatility, and it can oftentimes mean real volatility. We're seeing that today with the stock moving.
Stock's come back a long way though today, off its lows. It traded down.
Yeah,
as low as
yeah, it showed a lot of
45,
support.
It's already up $6 from there, Alex.
It has, and so what I looked at was just kind of taking advantage of the fact that this uncertainty.
I know I kind of wanted to even do more.
Some sort of a fever pitch this morning.
Do some lower striked ones.
I don't know where it's
But
going
this news honestly could continue to develop and
to the downside in Coinbase stock.
be bad for it. So
I'll
probably
not. Fully. I genuinely don't know. And so I just looked at this as a chance to sell implied volatility, fade the fear more so than anything, fade the uncertainty, and take
Premiums
advantage.
are big in here.
And so it's risk defined also. So in the event that this thing does move big or decides to make a big move one way or another, we're protected from that risk of ruin given its risk definition. I looked at selling an iron condor, simply going out to July monthly, so about 45 days to expiration. So in that sweet spot for many traders, month and a half out. 30
volume there on that wick up to VWAP on barbecue also.
Just how big these premiums were.
Yeah.
$1.50 credit, even though you got over about a $30.
Yeah, they're seeing the Coinbase IV juice.
A lot of percent. So you're talking about 60% basically of the stock.
That's incredible.
And so that's it. It's just a probabilities play here, Kev.
Right.
Come and beat me. That's basically the thought process here. It's straightforward. Between 33.50 and 66.50, this one stands to be profitable at expiration theoretically. $350 in risk to make 150. That being said, if I'm being fair and considering the kind of the counter argument to this, because of the kind of circumstances with this, there is a chance that this volatility remains elevated for quite some time. This may be a trade where time passing, volatilities may stay bid for a bit. You may have to get closer to expiration and be between this for this to be chance to be seriously profitable or get a big chunk of this credit.
Yeah, because one thing no matter what implied volatility does, you got about 45 days, and it's either going to be in the money or zero on that 45th day. So yeah, it's important for our viewers to understand. This is a $50 stock, and you've got a $15 points on the upside, 15 points on the downside. You're collecting about $1.54 is where it's trading right now, Alex. So this has a big landing area for this trade. Now, that doesn't mean it's guaranteed to be successful. It's a high probability, risk-defined, collecting theta trade, but it can still be wrong if you get a catastrophic move in either direction.
Coming down here.
Well, I would add to this too. It's not like you're selling a strangle.
Right.
This is a risk-defined iron condor, and you still got $30 on a $50 stock. Right. There's not very many names or assets.
Talk about that sweet Coinbase premium.
5 days. So it's for a reason. It's under now getting charged by the SEC. It's already kind of a little bit of a.
I know. I kind of want more. Throw out the
space.
money maybe.
Bitcoin's taken
That's such a
around
big
the
bounce
channel
already. Let's see.
It looks like it's actually having a nice day today. So I look at this as it's obviously a news story.
Gonna have more continuation
but what's the
forward.
term they use in crypto?
I don't know. The valuation on these companies is so high too. It sketches me out.
Fading a little bit of that FUD here with this one. Not bullish or bearish. Just
Almost
simply
12 billion market cap. Just another growth stock. That's crazy valuation.
Two different ways to look at
I don't even know what normal valuation is on these. Don't even do $1 billion a quarter revenue.
Trade. Very interesting. All right, let's take
A
our
negative
final break of the show.
negative
Coming up next,
operating
George
income.
Tillis is going to go over
123
our final
million.
trade of the day, and that's Google Alphabet, another name in the Magnificent Seven, which hit a 52-week high just today. Coming up next, take a quick break. Come back in 2 minutes with our final trade in Fast Market. See you then, everybody.
Retesting VWAP. We'll probably reject and keep coming down. Probably see low of the day soon.
nice move. I'm sorry, not the all-time high, but the high from last August, I meant to say. The Dow traded down to 33,047 today. The NASDAQ down to 14,476. The real story today, the Russell, you can see up 2.5%. A light day, a light week for that matter in terms of eco data. You got the RBA announcing a surprise rate hike, the BOC tomorrow, all of this ahead of the FOMC and the ECB tomorrow, next week, Kevin.
Been surprised to see the dollar and dollar futures higher with that rate hike.
Liechtenstein.
I thought that was kind of interesting today to see. I would think a foreign country being more hawkish would lead to kind of an inverse in the U.S. dollar, but no, our dollar is still higher, Ben.
Yeah, the Aussie doesn't really impact the dollar as much as some of the other foreign currencies, I think, Kevin, like the euro and the yen for that matter. But I do want to point out the dollar here currently right around 104. Even though we are higher on the day, I'm looking at it kind of bigger picture. It's been a bit of a chop as well, but right in the middle of the range we established last year, 94 to 114, and reflective of what we've seen in terms of some of the other markets. Crude oil, for example, hanging out right around 72. It's been range-bound. Gold just below 2,000, also range-bound. And yields, for that matter, kind of, you know, at the top of the hill there. And I think all of that's probably going to remain the same until we get some type of breakout here in terms of treasuries, until we get some sort of a shift from the Fed. Ultimately, lots to keep an eye on as we await next week's decision.
Yeah, you're right. Crude oil with a nice comeback here after trading down to 70.13 this morning. Now just down about 24 cents as we get to the noon hour in Chicago. Ben Lichtenstein, host of the Future Show with Ben Lichtenstein. Thanks for coming on.
Lichtenstein.
Time with us. Now, let's bring in my final guest of the show, Mr. George Tillis, coming to us live from Salt Lake City, Utah. He's going to cover one of our last names in the Magnificent Seven. That is Google Alphabet. George, very similar, right, to Microsoft, as in they're taking AI and just putting it in all their different services, right?
They are. I mean, if you think about, you know, all these companies, they effectively have monopolies in their respective businesses. And if you think about Google, they really have monopolized search. And one of the challenges that Google is facing or potentially facing is artificial intelligence, essentially bypassing search. In other words, indexing results without the normal search queries. But I don't think that's going to change for Google, which has actually integrated artificial intelligence into their search algorithm. In fact, they're one of the pioneers of large language modeling, and they're going to be integrating AI into their existing search infrastructure. I think, you know, if you look at the back half of 2022, overall the business had been
getting active.
The drop off in both advertising
revenue,
but also search
Good
revenue.
call,
But when
Jez.
they reported earnings in late
The
April,
volume's up almost 8%.
the quarter was down. I mean, they had an earnings quarter down about 5%, but sales were rather modest, around 2.5%. But really, the guidance, I think, for Google on a forward basis, they're expecting close to double-digit sales and double-digit EBITDA growth. And this is basically a turnaround story from an earnings standpoint, but you can also see that the stock is higher by 43% over the last year. The company's going through right now still a $70 billion share buyback. And irrespective of what's going on with technology names, which we know Google certainly is, these are companies with a tremendous amount of cash from operations. And you have Google with about 30% of its revenues. It generates cash from operations. It is a company that's spending quite aggressively in other areas like autonomous vehicle technologies and, of course, areas outside of traditional search, but it's still a very profitable company. It just had a very rough time for about 2 quarters last year in which the stock fell quite a bit, but overall in the last 6 months or so, it's done very well.
Yeah, George, February 8th and 9th, when they came out with that chatbot error in the promotional video, they lost about $100 billion in market cap in 2 days. But since then, they've come out with some earnings. They've guided a little better. AI has become prominent within this company, and the stock has made a miraculous recovery, George.
It has. If you think about the other areas too, I mean, one of the growth stories behind Google was the cloud. In terms of its cloud revenues, the growth in that segment is actually decelerating, but that's not all bad because now cloud represents some estimates between 7 and 9% of total sales. So it looks like to me they've gained market share in the cloud as well. And that's, again, compared to other names like Amazon Web Services and, of course, Microsoft's Azure platform. So they've done extremely well in that regard. And I think there's a recovery going on in both search, advertising spending, And you got to think about Google. I mean, 90% of their total revenues still come from some search or ad-based metrics. But at the same time, you know, the company's earnings profile is improving on a forward basis. And so some would say, you know, the stock is just going to get closer and closer to its 2-year highs, which are around $150. And it's still, you know, quite a ways off from that level.
Yeah, their goal is to accelerate AI into their platform as quickly as possible, and all the parts of the platform, because much like Microsoft, everything gets better if the use of AI, they can enhance them. George Tillis, thanks for coming on as always, buddy. Thanks for hanging out with us,
All right,
bringing us your knowledge.
Yeah, 8% there on
IDX.
IDX.
Trade it. So
GME 2460, up 1.18.
The price action that they've had, they've all run a long way, but like we had our conversation earlier tonight, they can run further, right? You know that. It's when and from what level will some of these stocks start to trail off? We don't know when that's going to happen. A trade you can put on that sets that up is something like an unbalanced butterfly. Remember, there's ways to unbalance a butterfly. You can unbalance it with price and width. You can unbalance it with the ratios of you know, we do a lot 1 by 2 by 1 and we spread out the strikes. What if you did this? Here's the trade that I have for Google Alphabet, another deviation on the phrase of a butterfly spread. What I did, I went to the put side. I bought one of the July 7th 123 puts, right? One. Then I sold 4 of the July 7th 120 puts. And then against that, I bought 3 of the 116 puts. I do that package for right around an 80-cent credit, which means if Google Alphabet just goes up from here, you make your credit and you have no upside risk on this position. Everything goes to 0 and you make your credit. On the downside, which I lined up the July 7th date with the expected move, which is right around $7, that's where that short strike of 120 comes in. So I've got the 120, 123 put vertical on, and then against that, to make my credit, I sold 3 of the 120, 116 put verticals. That's where you get that peak there. Now, is there risk on this position? Of course there is. Anything below that break even between 120 and 116 is where this spread underperforms. So if you think there's a catastrophic move coming up on the downside, maybe this isn't the trade. But if it moves into that key area between 123 and 120, this is a trade that you could put on for a credit.
IP come down a little bit.
Take off for a credit.
Plus 1%. It's below VWAP. Kind of breaking that support, resistance support. So
would bring risk into this position. So
not ready to hold that high of a support yet.
Selling 4 of the 120s, buying 3 of the 116s. An unbalanced put butterfly in a different way to look at it. All right, that's our show for today, everyone. I want to thank Randy Frederick, Alex Coffey, George Tillis, Andy Swan, and all of them for
Stop looking at me, Swan.
All of us here at the Teeter Ameritrade Network. Have a great day and a great afternoon. Next Gen Investing is coming up with Alex Coffey and Jenny Horn. Have a great day, everybody.
What? Good day. What? Good day. SPY kind of slowing down here a little bit. Seems like it'll probably keep making its way down to the low of the day, though. Maybe set up kind of an inverse cup here, or maybe setting up a little inverse cup right here. We did have a double top though, and I think we kind of are in this larger handle. Okay, SPY, pretty big bounce there. Closed my short, reopened it, reclosed it. Barbecue 24.78. Jenai.
I completely agree. I think if you have to eat both of these sort of foods with a spoon, then they can be classified
Out of a
as
bowl, there you go.
Right, and you can drink them. Yeah, I'm in complete agreement. But we'll start things off with Molson Coors here, which objectively looks a little bit stronger on a chart perspective. So here to tell us more now on the technicals, I'd like to welcome in our chart master, Rick Ducat. So Rick, we will save our cereal versus soup conversation till later on. We'll kick things off with beer, which I think we can all agree that beer is pretty much loved among all here.
I like it more than cereal or soup, so just put me down for a beer instead. And speaking of beer, you know, we had this controversy recently with Anheuser-Busch's Bud Light, and I put a blue dashed line here, a vertical line where that all started. Correlation doesn't equal causation always necessarily, but we've seen a large appreciation in the shares of Molson Coors since that point there, its competitor. So the chart is pretty interesting though here. We've had this upward trend line here that we held on to at this point. We had a nice big gap up during earnings for the bulls there. It brought us into strong new yearly highs. However, we saw these gains kind of evaporate during the next month or so. We filled the gap that was right there and crossed below it significantly. But then within only about a week, we surged back up once again to retake the area near 65, which is about where price made its best closing high at 65.08, this red dashed line here. Now, a couple things though today that we're not really seeing are we're not seeing new yearly intraday highs, and we're also not on pace for a close above our previous best close. So those are a couple of potential flies in the ointment, or flies in the beer, I guess you could say. But we would want to see, for the bullish crowd, a move above those levels that I mentioned before. And we are seeing some price acceptance at these elevated levels here. Look at this rather sizable volume node here. Suggests that traders were showing some conviction at those elevated levels here. And we can also see our RSI. This is another thing that you'd want to be on the lookout for here. Look for the RSI, our measure of momentum, to cross above that overbought area at the same time as price makes new highs. That would be a sign that typically regarded as the stock kind of going into overdrive, that would be regarded as a sign of strength. Now, in terms of places to watch for support and resistance, as I said, that 65 mark is kind of the point to beat to the upside. Beyond there, that's a whole different discussion of where we might stop, but that's the point that probably a lot of traders will have their eye on going forward into the close today. If we don't make it above that point, look for the yellow 21-day.
All right, bouncing back up there pretty big.
Right there, coming in around the 62 mark. That could be a point.
Not ready to drop.
Potential footing for the traders in this name.
I think it's really interesting that you highlighted that exact moment where we've seen shares really get a lift. So I guess in terms of what we're seeing from this analyst today, they have gotten some positive reaction from the fact that it was sort of like Bud Light's failure was ended up being their success. I have to say, I think all of these beers kind of taste the same. The light beers, the Bud Light, the Coors Light. Well, I mean, you know, the list just goes on, but that is my own opinion. But now in trading this name here, Alex, considering the fact they have gotten this recent lift, but this is almost like a media-driven storm, and I wonder what happens when the next news cycle passes, what that looks like for then Molson Coors. So walk us through a more neutral leading strategy, just considering the run-up it's had.
Yeah, it'll be interesting to watch, particularly because this seems to be something that, while I tend to agree with you, there's not a ton of distinguishable taste difference to myself, but those who are into these brands feel very passionately and are very loyal to whatever brands they like. And so we'll see how it all shapes up. But the stock's got a huge accretion already, obviously, from this. So the appreciation in the stock maybe prices in some of this bottom line impact that this analyst already kind of lays out. You can see that new volume node kind of building up near this 63 to 65 level. And maybe some of that basically acts as support if you do see that. And so I looked at Sound and Iron Butterfly. There's not a ton of volatility in this name. It's a consumer staple. It doesn't typically make the kind of movement that you've seen recently. Obviously, there's something going on within the industry that's caused that, or at least appears to have caused it. July 23rd is the expiration we're going to, 45 calendar days away. Selling the 65 straddle, buying the $5 wide wings. $3 credit would mean break evens of 62 and 68. So you basically have a window of about $6 where this thing can be profitable. Total risk on this is 200 bucks. If it does go outside of that net that's casted over the stock, the more this thing is close to 65 at expiration, the more of the credit the trader could potentially keep on this one. But you know, Jenny, this is one of those strategies where I'm showing the neutral version. Someone who has more of a directional feel may opt to lose half of this trade, you know, maybe just sell the call vertical, just sell the put vertical if you're more directional. But $6 window on a $64 stock is almost 10%. So if the stock can just sort of stay within that little range, or you know, about 10% range, this one could be profitable in some capacity over the next 45 days.
And now to look at another name that has been sort of stuck in at least somewhat of a range. That is, of course, Campbell's Soup, as it recently did break below its 50 and 200 simple day moving averages. But it's pretty much down about 11% on the year, Rick. And I have to say that from a price standpoint, not too exciting. The market is pricing in about a $2 move in either direction. But I have to know before the technicals your favorite Campbell's Soup, because now we've discussed our cereal versus soup debate enough.
I think I'm going to go with the classic and just say chicken noodle. That's probably my favorite, I guess. And we can see here that the chart is in kind of an interesting position right now, because first we had this long trend line starting with these yearly lows all the way back there, going up across the lows. And then we saw a similar trend line starting at the highs and going downward here. So kind of getting squeezed into this symmetrical triangle type shape here. Now that trend line on the bottom has been broken. We can see that we snapped through it pretty convincingly. And we also broke through another important point, which was our 252-day exponential moving average, pretty similar to the 200-day simple moving average Jenny mentioned there. We are below it at this point. And you can see how often it was a supportive indicator many times during the past year here. It was something that traders could look to for a bit of a bounce here. Past performance does not indicate future results, though, and we snapped through it this time, and now it's acting as resistance here. Old support can become new resistance and vice versa. So that's an upside point to be watching today. Pretty big red candle here. We're near the lows of the day, down about 2.1% or so. So we're also at another interesting position today, right near 50.50, $50.50, based on those old lows. Right about there we can see, let's clean up our chart a little bit here. These old lows right here, that's about where the stock bottomed out in early 2023. It'll be important to see if we can hold that point here. We're also slipping below our volume profile point of control, the area of heaviest trading, this thick red line right here. So that could be kind of a battleground point for price as we go forward in this name. Look for price to potentially bounce around that area if we do hold at that 50-50 level here. RSI, momentum, tilted more toward the bearish side, but at least we're staying out of the oversold area. Like kind of the opposite of our last chart, if we see a break below support and the RSI cross into the oversold area at a similar comparable time, that would be a confirmatory piece of evidence that the trend is strengthening to the downside here. So be on the lookout for that to happen. If we do start to break lower here, there's not a lot of volume in the area between 50 and 48 or so. So look for potentially fast moving prices there. We could see some support around the 48 level. That's about where we bottomed out in the past during October there. So that could be another area to watch. And as I said, to the upside, our 252-day exponential moving average comes in around 51.50. Just above that, we've got our yellow 21-day EMA coming in around 52.
The promising thing about Campbell's Soup ahead of their earnings event is the fact that this name doesn't move a lot. So neutral is still definitely a strategy to consider when looking at some of these staple names that aren't as volatile as, say, the tech names. But we'll leave it there. Appreciate all of the insight, Rick Ducat, our chart master. So now, Alex, when trading this name, you actually pointed out a reason to me to be excited about this name, and that's the fact that they make goldfish. So forget about soup. I am so on board with goldfish. So walk through what you're thinking for an example trade.
Yeah, no, I think that's one of those things. We cling to the brand that sort of carries the mantle. It's the namesake. But yeah, goldfish, Pepperidge Farm cookies and crackers, kettle brand chips. Yeah, tons of stuff that you maybe encounter and you don't even think Campbell's Soup, because why would you? But it just kind of shows that they're a little bit more diversified than just a traditional brand. But I looked at a neutral to bullish strategy here into earnings, but also one of the things we talked about in the previous segment is just how this isn't necessarily a name that tends to move a ton around earnings. Doesn't mean that it won't or that it can't. So I kind of disregarded in terms of a short-term trade, went out just our traditional month and a half long July monthly cycle trade here, though. So looking at selling the 50.45 put vertical for a $1 credit, that'll bring our break even down to 49. So in between those support levels that Rick had laid out of about 48 and 50. And this one, of course, takes $400 in risk to make 100. So if this stock does crater lower, it does leave a little bit outsized exposure. But a $1 credit means $100 in max possible profit if this stock just holds on to its 50 stock price. And as you mentioned, a lot of analysts kind of target that 50 level, kind of neutral on this name. It's just one that sort of chugs along, maybe goes sideways, up and down here and there. But if it just holds on to its gains, or holds on to this level above 50, that's enough for this one to be max profit over the next 45 days. So we'll see. I saw some commentary looking for some strength in those snack elements of the business. So maybe the goldfish arm of the business is going to carry the weight here, Jenny.
I will say that goldfish is goldfish. You can try off-brand goldfish. It really tastes different. That's one thing I will not trade down and get the generic goldfish that so many grocery stores offer. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now, coming up next, it's time to stray away from the staples conversation and look at a name that is surging on the day. That is AMD, up over 4% after some bullish analyst calls. We'll discuss that name more coming up next.
Many options.
Alright, SPY did its little fleshy flush there. Barbecue, 25 cents. So we kind of have a cup and handle, and then even a smaller one right here, I think. Little inverse cup handle. But it's not one to break out to the downside. So even a little head and shoulders here. Shoulder, head. Bulls keep pushing it back up. It's getting pretty volatile, pretty choppy here for just 130. Crazy. It seemed like the end of the day there with how volatile that was. Getting some news also. US says Russia behind Ukraine dam. That's some of it. US Indo-Pacific coordinator potential for miscalculation with China is real and growing. Not seeing any news that caused any kind of that volatility. Elon is no longer CEO of Twitter. New CEO is Linda Yaccarino. What do you mean analysts say have beat earnings? Beat their own expectations? So that means their expectations are higher. I was wondering if Overstock had something to do with that barbecue news. Yeah, there you go. That's what they're saying. It's funny because it just started moving up today when it hasn't really moved much. It did break out. I was wondering what news caused that, and kind of makes sense. Because they would probably just buy all their inventory, right, and just basically sell it on Overstock. All of these deals that have come out on the media are like not good for shareholders. I mean, just like picking this thing apart piece by piece. No value for us whatsoever. IP ripped up there. Close that cash cleared put. I think this thing could keep going, but at like 60%. So wait for a better entry. Pull back.
keeps talking about this headset head. To me, it's just not going to be a big enough thing for that ever to be a thing, because I just don't see people really taking to this technology as it exists right now.
And I think that you only add on to that the fact that theirs is $3,500. I mean, that is so expensive. That is a very niche market. And I agree. I think live in the real reality instead of the augmented reality. But here to tell us more on some of the analyst coverage now reacting to, of course, this Virtual Pro headset, I'd like to welcome in Caroline Wood, senior markets correspondent for the network. So Caroline, first and foremost, we need your thoughts on if you would purchase one of these, and then break down the analyst reaction for us.
Well, keep in mind, this new headset, the AR headset, is its first big product release since 2014 with the Apple Watch. I just, in the past few months, got an Apple Watch. So I'm a little bit late to the game when it comes to tech trends. So no, I will not be running out and paying $3,500 for a mixed reality headset. I don't think that's any big shocker to you guys. In terms of investor reaction, I'd say it's kind of downbeat. Since Apple actually announced this $3,500 headset, shares have actually moved lower. Of course, we saw the downturn yesterday, adding to that today, off about 0.3%. So now down about 1% on this news. And at least one analyst isn't wowed by it either. D.A. Davidson actually downgraded Apple to neutral from buy with a price target of $185, down from $193. So as you could just see, Apple currently trading around $179. So still about $6 upside from here, but scaling back his expectations and obviously turning all out cautious versus more bullish. This is Apple's, of course, first product release in almost a decade, but this analyst says it could be one of the most significant new hardware products since the iPhone back in 2007. However, this D.A. Davidson analyst says any good news is already reflected in the share price. Keep in mind, Apple share is up 38% year to date, only about 3% away from those all-time highs now that it hit just yesterday on an intraday basis. He also believes there are more important structural challenges for Apple when it comes to consumer adoption of AR, VR hardware, which could limit the near-term impact on sales and profitability. Now, other analysts are getting more bullish with their price targets, keeping their outperform or overweight ratings, but boosting their price targets. Credit Suisse raised to 200 from 188. Wells Fargo is now at 210, up from 185. Dan Ives over at Wedbush didn't boost his target, but kept his outperform rating and $205 price target, calling in a flex the muscles moment for Cook & Company. He thinks that given the higher price point, because initially the estimate in terms for this headset was around $2,000 to $3,000, Dan Ives was expecting around $3,000, so this is even higher than that, starting at $3,500. He says initial shipments are expected to be roughly 150,000 in the first year, but he thinks that at a lower price point by the second year, that number could be up to 1 million units in a year. And he says while the knee-jerk reaction from investors will be around near-term expectations, we believe this is further building a developer mode for Apple, which remains its golden installed base in Apple ecosystem. So the median price target now for Apple, $186.50. It was $180 just last month, so goes to show that it's the price target has come up. And really, despite the fact that it is trading so close to those all-time highs, 76% of analysts still have a buy rating on this name. So overall, still a lot of bullishness for Apple. We're just not necessarily seeing it reflected in the share price. No big, steep sell-off, but it's definitely not gaining any ground after the announcement.
It's been a monster comeback for shares in Apple as it made, of course, the new all-time high yesterday. Wasn't able to hold on to it, but I mean, we're talking about a couple dollars between friends at this point. This has been a really impressive one. You know, Caroline, I think a lot of Dan Ives' sentiment makes a ton of sense. I mean, as far as the calls for how many of these to sell, get sold, I'm not sure. To me, it seems like we're talking about a $2.8 trillion company. There's not a number of these that they can sell to really make a difference. So to me, I think we're talking about the wrong things. And I will push back. The greatest release that Apple has had in the last few years is the AirPods. To me, that is the greatest discretionary purchase I've ever bought, and there's nothing else close. So Apple's got to take more credit for those. Those are a world-changing device. But any final thoughts here? I know this is the show stealer is this headset, but there was tons of other announcements. I mean, this conference wasn't just an unveiling of this product.
No, it certainly wasn't. There's the highly priced Mac Pro with the M2 chip. there was some of the updates to iOS 17 for the iPhone. You can leave voicemails with video, so essentially FaceTime voicemails. Now, quite a few new and improved things, but I think the headset certainly stole the show. But to go back to the AirPods for just a second, Alex, I don't know about you, but when those first came out, I thought, who would ever spend $150, $200 on headphones that come for free with the phone? Because remember, the ones with the wire came for free. And now I think I've had 4 pair of AirPods. I have multiple in my purse right now because I use them so often and just have to switch them out as soon as they die. So, maybe we'll come around to the idea of this headset at some point. I think ultimately, though, most people would say that they don't want to bet against Apple. They have had their fair share of failures in terms of products. It's easy to forget about those things. There was that Ping Music Social Network. There was the round mouse. There's been, quite a few. There was the smart speaker system that didn't really take off. There was a video game console that didn't really take off. So there's certainly been its fair share of failures that really haven't, caused a scratch on Apple's share price. So I think that's something else we have to consider. Also, the fact that Apple's not changing its name, to reflect
Amazon
this
Alexa,
new push
Caroline.
into metaverse.
I thought this voice recognition stuff was supposed to be the next big thing. I'm still waiting for that to take off. I have one. I think I've talked to it like 3 times.
What? I talk
Siri
to her
always
every
thinks
day.
I'm talking to her.
Oh, I'm always talking to Alexa. She just never really gives me good news. I think she's always telling me it's going to snow or something. But Caroline, I agree about
Well, just real quick, fun fact with the new operating system, you don't have to say, "Hey Siri" anymore. You just have to say Siri, which is only going to cause more confusion because even when I'm not talking to Siri, she thinks I am, and she always likes to chime in, sometimes when I'm going live. So yeah, just food for thought.
when I was home, I remember the same. Anytime I said Alexa, she'd start talking, so I'd have to carefully speak. But I agree about the AirPod cord. That was like something I didn't even know that I never needed ever again, because now every so often I'll run with them on accident, and it's horrible. So just goes to show, really, though, all of our loyalty to this massive, very expensive Apple ecosystem. But we will leave it there. Really fun conversation. Caroline Wood, Senior Markets Correspondent for the network. Now, coming up next, it's time for Under 30. We are looking at Stitch Fix ahead of its quarterly update.
Gas the day up, huh?
On the session, George Tells will break down what we can expect from their update.
How do I do it? Just waiting for Spy to break this level. Probably not gonna watch it on his stream. I'll probably watch it on my TV without the commentary of the PP show. Watch it with my wife. I don't, we'll definitely get copyright striked for that. Maybe not in trouble, but I don't know. Definitely not monetizable. Yeah, I saw that news article on Overstock. helicopter live? I don't know what helicopter live means. A little fleshy on SPY there.
Basis, you have to generate more sales, not less, and that's not the case here for Stitch Fix, which is expecting now 388 million for the quarter. That's down 21% in terms of sales from last year at the same time, 492 million, and even last quarter the company generated around 412 million in sales. Now, again, comparing seasonality, you have to look at it from a year-over-year basis, but 21% decline in sales is not good, and I think that's going to maybe put additional pressure on the stock price unless the company does something to alleviate some of the concerns associated with expenses. Operating expenses are very high. In fact, last year the company, we've seen worse, but the company lost about $300 million on about 1.8 billion in sales. While at the same time, again, sales are decelerating.
There it is.
So that could certainly create a situation where unless they cut expenses, that might put some additional pressure on the shares.
Yeah, George, it seems like somewhat of a niche product as well, or service. Those who are super interested in shopping and fashion probably aren't interested in someone doing it for them. And those who aren't interested at all probably aren't that interested in it. And so you're kind of going for this targeted demographic of those who want to upgrade their wardrobe, but they need help. And so this kind of reminds me of a Blue Apron or a HelloFresh, those who want to cook at home but maybe need some help. But along the way, you're taught how to cook and what groceries you need. And so you sort of have this retention issue where I could see the same thing applying here. You start sending certain types of styles and people learn what they like, what they don't like. All of a sudden, Stitch Fix, unfortunately, has, taught their consumer how to do it without them. Any quick final thoughts here, George, before we say goodbye?
Well, I think that's one of the challenges the business faces is that people will try it. I think Jenny alluded to she's tried it in the past, and then they'll eventually cancel it. So they have to do something to retain their customers. And again, I will say this: we've seen a lot worse companies in the retail space. Overall, the balance sheet for the business is not bad. Doesn't have a lot of debt relative to equity. It just has a sales growth problem. So if they address it in some capacity or reduce expenses, we may end up seeing, based on the market cap, which is very low, a stock that also moves quite a bit to the upside. So my point to end this is, you could hear something good, which could move the stock quite a bit just because of the size of the stock and the market cap. But at the same time, if they actually miss these numbers, we could see another dramatic decline.
Yeah, and George, there's been this really rise to relevance in so many rental companies, and to me it seems so much more cost effective to just rent clothing versus hiring someone that then you buy the clothes. That's at least my train of thought. We'll have to see when they report their third quarter today after the closing bell. We'll leave it there. Appreciate the insight, George Tillis, Senior Markets Correspondent for the network. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the Watch List with Nicole Petalides.
Supply is coming down a little more here. I don't think there's a court hearing today on barbecue. He's coming down with it. Looks to take profits at the near the low of the day, 426 or so. They were making a bigger inverse cup. Kind of made a little one here with a little handle. Maybe making a bigger here one, an even larger one.
Nicole.
All right. Thank you for all of that. Big stories today. Renita Young, thank you so much. Great to see you. All right, let's take a look here at the bigger picture. Michael Bathis is with me, private advisor, Rockefeller Global Family Office. Thank you for being here.
Thank you for having me, Nicole.
Here. So we have a lot going on. First of all, before I ask you a lot of specifics, last week felt like a packed week. How are you feeling now as the S&P is not far off from 52-week highs, NASDAQ's at 52-week highs? How are you feeling?
Look, it's kind of funny because nobody really realizes that the markets are close to their highs. Everyone just talks about negative, recession, the debt ceiling, earnings falling off, and yet we're at almost 52-week highs. And I just think, you know, the market's starting to realize that maybe everything's not so bad. And we always know it precedes the economy by 6 to 9 months anyway. So if we are going to have a recession short term, the markets are already starting to say, okay, maybe it's not going to be as long and as deep as we thought it would be.
You know, just a moment ago, I saw a clip of Jamie Dimon. Now, JP Morgan has said, you know, the rally may be short-lived, go to cash or gold. There was something that they said not that long ago, but he was so positive. Now, we know there's a potential, right? Bill Ackman was telling him to run for president, but he couldn't say enough things about the American economy, forget the debt ceiling, I mean, that's over, we should probably just get rid of it. He couldn't say enough about our military or this, that. A real feel-good speech overall. I mean, that's a nice feeling.
It's a great feeling because he has in the past been quite negative, and especially let's say the last 6 months he has not said much positive, and I'm pretty sure it was Goldman. I'm pretty sure Goldman came out and said the recession, they went from having a 75% likelihood of a recession down to 25%, and then I heard a few other firms are saying the same thing. So I think it comes down to the fundamentals of the economy, but more so the fundamentals of companies are hitting earnings.
Yeah.
Now they have lowered them a little bit, but they're hitting earnings, and their revenue numbers are coming in much stronger.
Yeah, they did. I think the Goldman had lowered the risk, basically, the risk outlook, and so that was some good news. The concern here is today I had a great guest on from Wedbush who was positive about consumers going out there and taking trips and spending money, and my concern is that they're using credit cards, but they have jobs. They have jobs, right? I mean, you have a very tight job market.
That's a great point. I mean, the unemployment rate is still low. The job market is still growing.
Yeah.
And you're seeing spending continue. If you go to an airport or on an airplane, every flight is packed and airports are jammed.
And expensive.
Expensive.
And still they go.
Exactly. And that's not going to change this summer either.
Right, and so unless something changes, I mean, it certainly looks like big news. So what do you think now? I mean, we have the Fed next week, the 13th and 14th. We'll hear from the Fed. There's been talk about a hawkish pause.
Yeah.
That maybe they'll give themselves the opportunity and skip June for any moves. What do you think of that?
I think it's probably the most likely scenario. And you're going to also probably see by the end of the year a cut or two, assuming the economy keeps going.
So you're still in the camp of the cut.
Yeah, I mean, I just think
there are some people who don't think that.
I think they went so far, so fast that a pause is at a minimum necessary, and you're also seeing bond yields at 5, 5.25, and until the yield curve gets back to more normalized, people are making money in short-term bonds. I mean, why not own them?
Right, and they really are making money in short-term bonds. What about some of the other sectors? I mean, as you're looking around, I mean, energy has sort of been fluctuating, and that was great in 2022, not so much in 2020. But tech has still been shining. People talk about AI and the software, EVs. There's a lot of hoopla around Tesla. Apple was another, obviously a big week for Apple now.
Yeah. Look, I think big tech is coming back, and it snapped back pretty rapidly from where it was. As you
Up
look at
is
the
up
NASDAQ,
15% now.
There's also pharmaceuticals haven't really done much, and they're trading at pretty.
The coal looks very bright.
And you're getting a dividend yield that you're only paying at this point capital gain tax on it. You're not paying ordinary income like a bond. And you're also seeing some of the banks are some of the big banks are starting to really make money with these rates. And the fear of what happened previously with Silicon Valley and all that has died down a little bit. I'm not saying it's over, but it's died down quite a bit lately.
I mean, there was a feeling that there were just too many regionals in the first place, a lot of uninsured cash as deposits and all that. And who knows whether or not something comes of it. I mean, there's also talk about regulation for these big banks, too, to shore up more cash and have that on reserve. I mean, I don't know how that changes the picture for them. Is that problematic for them, or probably
I don't think so. I mean, I think they're already prepared from what happened in 2008, and even though it felt like that for a couple weeks, I think they're pretty well capitalized at this point.
Right. I know you have an array of clients, some who are probably going into retirement, but a lot of, wealthy clients, athletes and entertainment people. What do you tell them for the big picture? How do you do a balanced portfolio for them? I know each one is sort of geared towards each person, but is there some sort
got an engulfing candle there on the. I closed my short for now.
Very important. Having a 20 to 30.
You might get one to bounce in the support first.
Either small business,
let it sit back up, maybe move back to VWAP.
Change, or the athletes and entertainers that get paid, in heavy chunks. I think limiting the downside with that and creating a level of comfort with alts and fixed income, but yet trying to get some growth at the same time, because if your money's not working for you, then obviously.
So fixed income is definitely in there,
right?
Yeah,
it's definitely. Munis are pretty reasonably priced right now.
My dad used to love munis. He was all about munis. Right?
Yeah, but you've gone from getting no yield to now getting tax equivalent yields that's higher than corps.
Right. And then for equities, I mean, just for the regular folks who like S&P and triple Qs and all that. I mean,
we try to keep it. Active management is definitely prevailing right now. Managers who are, adding value to portfolios are probably up 200-300 basis points at a minimum over the indices, and I think that's going to continue. You're going to need to be in the right names and the right equities.
And when you say alts, are you looking at like almost like angel investing and looking at other companies, or what are you thinking?
More like hedge funds, more like market neutral, like more like multi-strats where the volatility is low, but you can generate return, and then private equity too. At this point, probably there's a lot of cash out there that people haven't deployed.
Right, and you never can really time the market. Is there any don'ts at this point?
I think you always stay invested. You always remember, create a plan, stick to the plan, because in volatile times it's easy to divert from the plan, and that's when most of money made in the market is on the most volatile upside days.
Yeah, exactly. You'll have a couple of big days. I mean, as far as a recession, if you're worried about a recession, do you think it'll be short-lived? I don't remember. Did you say you were worried about a recession? Or
I'm not as worried as some people are, but even if it comes, it's going to be short-lived and it's going to be small.
Right, but still a fan of long-term investing and all that.
Yeah.
How about international? I mean, that's
a
done
great
very
point too.
well, right?
And I think it's going to continue to do well, especially if we can get
Ex-China or with China?
I'd probably look at more larger cap international and more safe international.
Right. Yeah, there's been a lot of looks, in Europe and India.
Yeah.
All right.
Yeah.
Well, so far so good. We've made it this far.
I know.
It's great to see you.
Great to see you. Thanks always for having me.
Pappas, private advisor, Rockefeller Global Family Office. Thank you.
Thank you.
All right, later this hour, we're going to talk all about Apple because Dan Ives will be joining us with his key takeaways from the Worldwide Developers Conference and see he thinks
Moving back up to VWAP. Pretty choppy day here.
Headset. Is that the way to go?
Is what you're going to see after crazy rally to slowly turn the ship.
Look at the SEC lawsuit against Coinbase.
Fighting back and forth.
Crypto investors. Our panel ready to talk about the energy trends.
Zoom out, you see it's turning.
And up next, reasons to have Micron and rocket companies in your radar.
That right shoulder. Fighting this handle. Yeah, she's fancy. FIE, 30% green. That looks pretty nice too. Good looking charts out there. I'm here holding barbecue. Boeing faces 787 delivery delays after new defect discovered. Boeing to inspect over 90 Dreamliners for defective tail parts. Yeah, that definitely had an effect. In Apple's Worldwide Developer Conference yesterday, words AI or metaverse were not mentioned once. Really trying to beat that stigmatism. Proud of you. Only if you scaled and you bought with a plan and you stick to the plan. Not out of impatience or FOMO. Then yes, I am proud of you.
But recognize that in a decent sized segment of the market, and it's beyond just 7 stocks, but it's been narrow. Those have really been the Jack and the Beanstalk story of the year. They have grown to the sky. And I said I paired back, a whole bunch of semis already, including Nvidia, I think AMD, and probably I think Broadcom during that crazy spike.
Nice, Lords. That's got to feel
but
good.
At the same time, you've got an enormous market that has gone
Well, I agree with Kramer.
sideways with perhaps, I know not perhaps, it is. It's been an upper bend, and there are all kinds of opportunities out there. I would buy tech into weakness. I will not buy tech
13 billion market cap.
now into strength, except for
They do 660 million in revenue quarter.
special situations.
They're losing 1.4 billion a quarter.
In a third year of a presidential cycle like we are
Seems
now,
legit.
the summer gets a little bumpy, and I wouldn't be surprised if we had a 5% pullback over the summer. But price is the final arbiter, Nicole, and all those recession fears, which I have to worry about, like the inverted yield curve, they're not playing out yet. It's perhaps a story for late 2023. First half 2024, but for now, if you're a bull,
just a SPAC
waiting
to acquire a company.
We'll have a little bit of turbulence, but we're still going up.
Right, understood. Okay, so the tech you'll buy on some weakness. You have a couple specific names that you like better than the others, but for
should trade around $10 until there's speculation on who they're going to acquire. It could fluctuate.
Well, I came in besides semis. I loved biotech for the year. I still like biotech. I didn't give you any biotech today because we already own some, and I couldn't find a special situation. But I still do like biotech for the rest of the year. My one tech
it's gone up 6% in a year.
Position in Micron. It's the only one, I believe, in our semi portion of the portfolio we have not sold yet. In fact,
the Hong Kong's back.
More. And I did so because
it's still a SPAC.
Hasn't got the excitement. And again, it's not
I don't know what you're expecting with it. Even looking at the chart, it's ridiculous. This is only 6%.
It still behaves
this has been a year.
Reasonably well. I would add to it somewhere between 65 and 67. I think it could hit 80 to 90 this year. So that's the tech stock
Psych
that I would
acquisition.
buy in a weakness. The other ones that we sold, I mean, I have no problem buying back more of the Nvidia that we sold, or AMD or Broadcom, but I won't do it up here. I'm going to need to pull back.
Yeah, yeah. All right, so tell me about some of the other names here. You had Rocket Companies and Alico.
That's right. So Rocket, this is going to be similar to Micron, where look, the bond market collapsed in 2021 and 2022. The mortgage market was decimated. We went from really 2.25% 30-year mortgages to a 30-year mortgage in the sevens. So imagine your Rocket Mortgage, you're the biggest mortgage provider in the United States. You're growing market share, but your product nobody wants anymore. Well, rates really, I mean, interest rates went up, mortgages go like that. I think we've turned the corner significantly. Mortgage rates have come down a little bit. I think they will continue to come down over the next at least 12 to 24 months. Rocket's the biggest player in the industry. It's been just decimated. Sign me up for that. They're continuing to add market share. I think the stock could double in 12 to 18 months.
Wow, that's amazing. So
And still way down from where it was.
It's at $8.50 today. And Alico,
we've owned it for a long time.
Yeah, what is that?
Listen, and I'll say it has been frustrating, and on the disappointing side, they own it. It used to be a family-run business. They own Orange Groves. They were carrying the real estate at a fraction of what it's worth now. I think they're carrying it roughly $5,000 an acre. Now it's got to be worth $15,000 to $25,000 an acre. There's new management in the last couple of years. It's a turnaround story. If you're an investor, this one requires
the ego on you.
It's got no AI in it. It's just got real operations. They're going to sell off the Orange Groves and revalue them. But I think if you're
Thanks, Ace. Appreciate the gifted membership.
You could get a really good return. Again, maybe
Much appreciated for your generosity.
Goes up
Bo Aura.
over, 1 to 3 years.
You look like a lurker for sure.
Like the others.
Right. Okay.
That profile picture, stock image.
On track. I mean, we're sort of at the end of what the Fed may or may not do, right? The debt ceiling's done. How are you feeling?
Come out of your hiding. Come thank Papa Ace for your gifted membership.
How much is it really?
Get on our Discord server, which I will link in the chat. I haven't linked it today.
Or then are you going to be worried about the bumpiness of
You guys never remind.
landscape?
Hey, Dink.
Well, look, you've been at this a long time, like I have. There's always uncertainty. The market, it's like a pit bull with fresh meat in its mouth. The market grabs whatever the current uncertainty is and doesn't let go. We got by the debt ceiling. People talked about default and all this nonsense. And again, the sky is falling. I've been
fast merger.
Critic of the Fed with you. People get a little on me for that, but I think the Fed has done an absolutely abhorrent job. They're supposed the smartest people on earth and the greatest.
Maybe you are real, Bo.
Gosh, I can't imagine.
Is that a real picture?
Worse. The Fed's
you?
done, and for all intents and purposes, you want to give them 25 basis points, be my guest. I don't care, but they're done. They're not going to cut rates this year. I think that forecast is out the window as well. The job market has totally shocked me. I am so pleasantly surprised to see 300,000+ new jobs created. I said it was going to be so hard to engineer that soft landing, but the debt employment market is really stubbornly good. And people assigning all this politics in creation of jobs is nonsense. What we're all learning is COVID did something structurally to employment that has befuddled the masses, myself included, because I did not think we could create 100,000 new jobs. And it's not about policy or the Fed. COVID did something we're still trying to understand. It's going to take some time. And look, I hope and pray, which is not an investment strategy, but I hope that the job growth doesn't fall below zero, because that's great for the economy as long as it's in that, not too hot, not too cold area, and Goldilocks wins. Right. And that's where we are right now in Goldilocks.
All right, Paul Schatz, great to have you on the show always. Thanks for being here today. President, Chief Investment Officer at Heritage Capital. All right, coming up next, Wedbush's Dan Ives joins us to talk all about Apple. All right, it's out.
this game, and I think it's just going to continue to be, some I think breadcrumbs over the coming quarters in terms of some new endeavors that they're going to lay out.
All right. Well, thanks for all the explanations, Dan. I appreciate it because sometimes you can read and read and read, but really not know what I'm using this for. But you're right. I'm going to warm up before I get out there on the slopes. I'll do some practice runs. Dan Ives, thank you. It's wonderful to see you. Managing Director, Equity Research at Wedbush. Thank you. Still ahead in the second half of our show, we're focusing on Coinbase because it's facing accusations that it's violated securities laws. So we'll dive
Barbecue getting pretty illiquid here. Got a big gap in volume. Many minutes with no trades. Yeah, you're gonna get some Ivy Crush for sure. GME, they're pumped right now, pretty heavy. Yep, 2%. Little rally up to VWAP there. Trying to get back into that channel. Charles Payne, huh? You had a couple. You had what, like $2,500 order here, and then a $1,900 order here. Now it's back to $2,452. Oh, you got your lawn mowed. What was wrong with your lawnmower? Your dog rolled in Dorito dust? Yeah, I saw that, Grumpkin. One of you guys shared it on Discord. I actually opened it up and never read it. Let's see it. Here it is. The Holdings, LLC. Trademark. Comforters, towels, bed blankets, bed sheets, duvet covers, shower curtains, textile tablecloths, table napkins of textile. I'm sure you've seen the Twitter post. What Twitter post is this talking about? Twitter post by now about Teddy. Yes, we should be excited for it. It's all clear now. It goes live on July 4th. Between now and then, GME or RC Ventures is likely going to purchase, create some sort of merge with Barbecue, then placed under Teddy on the 4th of July. Solidifying phase 2 of G-America. Absolutely bullish. This is what RC meant in his tweet about them taking his kindness for weakness. He's about to go on the attack. No dates, but 7-4, not finished twice. What tweet is he talking about? About Teddy. Oh, yeah, you can sell cover calls, sure. Know the risk. It's, the risk is, I don't have any idea what snack is. The risk is just cutting potential gains. But yeah, I was going to get puts for it. Just haven't yet.
Points from the August highs of last year, so that's a big hurdle to keep an eye on. Everybody was talking about 4,200. For me, it's 43.60, 43.20 area. Here you can see, there it is on the left side of the screen here. Again, that August high I mentioned. You can see some of the strength in the S&Ps, the move. We're holding above the 50, above the 200-day moving average. The Dow today trading briefly down below 33,400. It's off that lower level right now, but mixed activity. The real standout here, I think, is the Russell small caps. Look at the move up we're seeing. Now, we're looking at futures here today, but I did notice that the the Russell index got near 1860. Futures here just short of that level as we speak right now. But I think, again, the point here, the big hurdle was that 200-day moving average, which we convincingly have now taken out. And I just want to point to the fact that, well, with the bid activity we've seen in the indices and basically a lot of expectations that the Fed's going to pause or skip at that meeting next week that you mentioned, Nicole. You can see how the VIX has come off. Look at this, below 15 as we head into this late day trade. So definitely a lot of optimism out there as the indices are grinding higher, holding upper levels. As you mentioned, near 52-week highs in the 2 of the 4 majors. Now we're just kind of waiting to see if the Russell and the Dow will start to join in here.
Yeah, and you know, I like that you touched on those small caps. And when we had on Paul Schatz, he said, you know, he was bullish in the beginning of the year, but he just didn't expect it to be so front-loaded the way that it is. All right, we'll leave it there. Ben Lichtenstein, great to see you. Thank you. Let's head back to a top developing story, the digital currency space. So you have the SEC suing Coinbase, claiming it's violating securities laws. This comes right after news about Binance under the microscope. Kevin Green is with us of the TD Ameritrade Network to tell me about these key accusations. What does it mean? Why does it matter?
Yeah, so I think we have to really separate the Binance actions that took place yesterday compared to what is going on right now with Coinbase. So the SEC is actually charging Coinbase or alleging that Coinbase is operating as an exchange and as a broker and as a clearing agency, and they are not registered with the SEC. So that does provide a little bit of murkiness when it comes to their operations and how they're separating their duties, if you will. They did first warn Coinbase about this action on March 22nd. And Nicole, I remember you and I actually talking about that Wells notice that the SEC sent, and that caused a little bit of shock when it came to Coinbase's shares here. But operating as a broker and exchange and clearing agency, while also soliciting customers, handling orders, and allowing bids, and acted as an intermediary all at once. It's a situation, Nicole, that you could have, and it's not saying that Coinbase is actually doing this, but you could have a situation where there could be actions that are taken by a broker or an exchange that might not be in the customer's best interest. And Gary Gensler actually called that out today with some pretty harsh words when it came to crypto. Now, when we were looking at the CEO of Coinbase, he actually responded in a tweet, really just stating that they do plan on fighting this at this point in time, and if they have to be the beacon of light when it comes to the crypto industry and trying to get a little bit more clarity on the regulatory nature of this business, then they are going to do so. And that, I believe, probably will give them a little bit of headwinds here in the short term, but for the long term, it will provide some crypto investors a little bit more confidence that the marketplace in itself is going to be viable as well as transparent, as well as trying to get the regulators and Congress and the executive branch and the judicial branch off the sidelines and really start taking some actions. I mean, we have a situation right now where the SEC and the CFTC, which is the Commodity Futures Trading Commission, are really battling for territory over the crypto space. And we're kind of seeing it with these conflicting messages from both of those agencies. So Coinbase taking this action to the courts or trying to repeal or appeal this particular action that the SEC is taking against them could actually give the crypto industry in the long term a little bit more clarity as to what exchanges or brokers need to do in order to stay compliant. And right now, we just don't have that framework in place.
And the part here, it also says penalties from the SEC suit could top $6 billion. I don't know if you mentioned that, but that sort of jumps out at me. And I sort of wonder, how is it all coming up now at this time to say that, they're illegally operating an exchange, they're an unregistered broker? I mean, where have you been? I mean, this is what they've been doing all along, and Coinbase was actually incredibly popular. And of course, we had a blip, it sold off, it started to come back, and now you have a 12% move. I mean, it's tough on shareholders to have these sort of pop up, but where's the SEC been? And what does it mean going forward? I think that's the better question.
I think it's the evolution of the product offerings that are also within the crypto space, especially with staking. That's actually been gaining a lot of attention here as of late, which is where a crypto investor would be able to let an exchange or a broker to be able to borrow their crypto, and then they would receive a pretty handsome interest rate on that. And then that is actually what has been a little bit of an area of concern, because once you start doing that, Nicole, then especially at those coins that are being lent out or traded between different firms or exchanges, that's where it becomes a security in the eyes of the SEC. I think that's probably what really accelerated these actions that are being taken right now. But also it's some of the fallout coming from FTX and learning what happened there. And then also when we talk about Binance, once again, this is a kind of a separate situation. They're getting hit with some of the same type of allegations, but they're even going a step further when it comes to the SEC. They're saying that Binance actually commingled customer funds, allowed executives to be able to transfer funds to other entities, and even potentially actually having trading activity to make it appear that there's more liquidity in cryptocurrencies or certain crypto coins than there was actually occurring. So those are a little bit more aggressive, and they're completely separate from what Coinbase's allegations or the allegations against Coinbase are right now.
But it just doesn't set the right tone to just have one headline and then another headline. But what does is the fact that, Bitcoin itself went back above 26,000 and is actually showing some up arrows. So that brings some confidence for folks, that it all doesn't fall apart. Kevin Green, great to see you. Thank you so much, and thanks for the explanation on all that. Appreciate it. All right, coming up, our panel is ready to talk all about the energy markets, what they are watching after Saudi Arabia moves forward with those production cuts. They're ready to hear more from our pros.
In the income.
Open and bot again. %, not bad. Just kind of consolidating. Go it, Thunder. Sell some covered calls. That's the implied volatility. Yeah, the weeklies are up there. Bouncing a bit there. GME also 2.78. Yeah, eyes up 10.3. Camping World up 8.3. Nordstrom's up 5. That looks bullish. Just broke that level too. 15.5. IEP broke out a bit there. Up 4.6. Back west bouncing off VWAP. Up is 12.8%. Big at 23%. FFIE is breaking out 31%. MBAS holding up tremendously well. Had me in your luggage. I don't have any exposure, so I won't have luggage on that trip. I sold those bags.
Exploration and production companies, those are going to be the ones we would rather stay away from just because of range-bound oil prices. But at the same time, if you look at the EIA report that came out today, we think this is kind of an indicator and sort of a reading of the tea leaves of maybe why you should allocate towards more defensive parts of the energy sector for the rest of the year, just because they are forecasting that U.S. oil production is going to move up. It was actually a fairly substantial move in expectations compared to what they reported in their May readings. And so we do think that for those companies, particularly on the pipeline side that are benefiting from higher volumes in the U.S., that you should allocate more towards those areas of the market, not only because they're defensive, but because we think that just thematically they could be best positioned within the energy sector.
Interesting. So more production from the U.S., move into those defensive plays. Stuart, where do you see?
Might grab a short up here if we start to show resistance.
About, obviously, there's oil production. We're also having the clean energy.
Should be setting up a little cup and handle.
Changeover. What are you seeing going forward, and where do you see some growth or some good expectations?
Yeah, so I think expectations is the right way to think about it. And if you look at the sector as a whole, which of course is driven by upstream, the sector today is trading at about a 34% discount relative to projected EBITDA for the next 12 months. That's a pretty healthy haircut. So the market's already being a little bit skeptical. So there are names out there that we think that are undervalued. Like take a Chevron, for example. We have a 4 stars or buy opinion there. And they have more natural gas exposure than Exxon does. And natural gas prices are really weak right now at the 225 range. I don't think that's likely to persist for that much longer. So I'd rather, I think Chevron's a decent way to play this. And then on the pipeline side, pipelines have the benefit of not having that direct exposure to commodity prices. It's more of an indirect relationship. And so long as crude prices, for example, stay high enough that the E&Ps aren't going to be doing anything differently with their activity levels, then the pipelines can prosper. So you take a name like an Energy Transfer, ticker ET, or an Enterprise Products Partners, EPD. We have 4 stars or buy opinions on both of those.
Thank you for that as well. Good to see you both. Stuart Klickman, Rohan Reddy, thank you. Good to see you both. Thanks for all the details on the energy sector. That's going to do it for us, friends, here on the watch list. Thanks for being with me. I'm Nicole Petalides, every single weekday, 11 a.m. and 2 p.m. Eastern Time. Keep it right here. Market on Close is next.
I'm moving up there. Might not double top, we'll see.
Here for the Russell 2000 small caps, moving from 1750 to 1850 in a hurry, basically, mostly over the course of the last 2 weeks. So pretty nice rip here this morning, following through to the afternoon, and Russell's looking good.
Quite the trading strategy indeed. I usually don't sell in the money. I stay pretty close to the price. Maybe a couple strikes.
We've got kind of an interesting mix of stories that we're going to be talking about here this afternoon. But I think the easiest way generally to describe the situation.
Yeah, spine's ripping up there.
Continues to slide, stay low, real low, 14. We broke through a long-term uptrend in the VIX. It goes back to 2018. I'm going to talk about that at the end of the show. I've been out for a day or two, and we had a lot of earnings. It's time to update my risk radar. Don't miss it at the end of the show. I think a couple important things, and some that might surprise you too. As a sign of the overall risk optimism and strength in markets, you got Bitcoin up 4.5% today, despite Coinbase and Binance undergoing a scalpel degree
30 delta. Yeah, I mean that's out of the money.
Bitcoin able to bounce back despite that.
That's just a good general rule for like wheeling and theta farming. Not necessarily predicting an earnings play. He's trying to make a earnings prediction that's gonna be bearish. Just get the IV crush. But yeah, no, around 30 is usually pretty good. I'd say. I mean, there's other variables though, like earnings.
Is still down in the last 48 hours because yesterday's sell-off. So it still is below where we were to start off the week. BTC definitely.
I'm assuming you're doing short term too. You're doing weeklies. Get the premium of the shares. How's that a loss? The only loss is the opportunity cost.
Bitcoin's been bumping its head against 30,000.
There isn't a loss if it's above your cost basis. It's guaranteed profit. I mean, I guess the covered call is guaranteed profits above your cost basis. Doesn't mean you'll make money on the shares if it drops a lot.
Bitcoin doesn't like Fed hikes. I've thought that maybe the weakness in Bitcoin would be attached to a hawkish outlook from the Fed, but you're not getting any evidence of that elsewhere in the market today. And generally speaking, that just is not the case. High beta stocks, the SPHB ETF there, are doing well today. That kind of risk-on tone is there, even though the NASDAQ's lagging a little bit because Apple's just kind of ho-hum after its debut. The dollar and the 10-year yield tell us that some of the possibilities, some of the odds of that rate hike are getting taken out. We had that strong push in the yield higher and the dollar higher throughout the month of May, but now it's just kind of fizzled a bit. So the dollar's still staying firm. It's not really going anywhere, and yield's still around 3.738. But the fact that we slipped and have kind of plateaued going into next week's Fed meeting, with the odds of the hike now dropping, the potential for the dollar really to break out in the 10-year yield looks fairly low. But if they do, then it still probably tells us something about the Fed. It's a tricky one because the language we got from the Fed speakers at the end of last week, the second half of last week, was kind of dovish. But the data's been beating expectations. We've got Danielle DiMartino Booth joining us here at the top of the show. So that's the setup into that conversation. I think it's a really important one. Has there ever been such volatility around the expectations for a Fed hike or a pause or cut or anything? Because it's gone all over the place the last 2 weeks. But right now it sits at a pretty high level of conviction around a pause or a skip, whatever you want to call it. Watch, though, the regional banks, too, I think, as a sign that some of the logic here behind a Fed pause or skip is misplaced. Think about how many times Jerome Powell has cited, and many other Fed speakers, and literally everybody in the general market, asset managers, strategists, everybody has talked incessantly about the way regional banks are going to slam the economy. But guess what? People are traveling still. We didn't get the big credit tightening. We haven't had the major economic fallout. Regional banks are doing well. Look at the airline chart trying to turn up here. Caesars, though I think that might be because of me. I got crushed at the first weekend of the World Series of Poker. Oof, rough. If you want any bad beat stories, let me know. I got a lot of them. But the point here
plays
is
the
that
World
the economy just
World
hasn't
Poker
fallen
Series?
off a cliff. The regional banks
Did I just hear that right?
firm up. Watch that chart, because the fact that they're doing so well really throws a major, major wrench into the narrative that the Fed has to pause because the regional banks were going to cause a major economic catastrophe. It just doesn't make sense. All right, we'll leave that conversation for Danielle shortly ahead. Perhaps the most interesting story and the most surprising one today
On the World Poker
is in the
Tour?
world of sports. But in this case, it kind of overlaps with us as stock people, and it's golf.
What it sounded like.
Renee Young's got the story in the newsroom for us, in case you haven't heard already. PGA and the Live Tour are going to combine. All right, our senior markets correspondent taking a look at it for us. Let's have a little fun here. Start off, talking some sports here, Renita, but kind of a noticeable impact in some stocks, in the golf world.
Absolutely. So I'm looking at Topgolf and Acushnet. Both are higher. Topgolf is seeing its highest in around 7 months, and it's on that news that the PGA Tour is merging with its Saudi arrival, the Live Tour. Now, what's interesting about this is that since Live premiered back in 2021, it's been shelling out a lot of cash to get regular PGA players. And so this fight that's been going on for the past couple of years, it effectively ends today. And so after that surprise announcement, we do see those things happening. And it also includes the DP World Tour that's formerly the European Tour. Now, such a surprise. Also,
Everyone said
because it does drive a
we were talking about cover calls.
money to both brands. Jeffries
For sure.
projects that it'll drive more interest in the sport. It'll enable pooling of resources.
You can sell a naked cover call, absolutely.
Expertise. Analysts also expected to attract new players, sponsors, and fans. That's always a good
Financially
thing
illiterate.
about a gaming or a group like this. And so it comes also after Topgolf's outlook cut made investors concerned that it may be losing some of its shine around now. Golf became a really big pastime, especially at the Topgolf event center.
Closed out. I had a little short there. I just closed out of.
Or shortly after lockdown ended. And Jeffries does
we get
rate Topgolf a buy.
Get another test of that high of the day.
Price target on it. Acushnet Holdings.
Yeah, I think that guy's in
$51 price target with a hold rate.
the World Poker Series. Nobody said he played. He got knocked out the first few rounds.
And I think it did obviously catch the market by surprise here.
Yeah.
I'm not sure what this means for my rematch this weekend with producer Rob Wyatrowski. I haven't really gotten any asks from either tour yet for my golf skills, but I can say the revenge will be had.
Straight top blows up.
Vegas anxiety and losses.
Yeah, I don't sell options on margin.
Performance on Saturday. Kev, you gonna wake up and come?
You can just do spreads. Cover it with a long call.
Probably got your own tee time already.
If you can make it to my early tee time, Oliver, you're welcome to come out.
That's the proper way to ask
my
it.
early tee time is about 9 o'clock in the morning on Saturday, so I have a permanent tee time with friends that I've been doing for years.
That's a little early for the Rennick schedule.
My tee time for Saturday. Exactly. It seems to weed out some of the younger.
There you go, DNA 1.8.
As I imagine it might be designed to be. All right, let's talk some other news surprises here today.
You're 20 incoming.
Kind of hit late in the morning, down 1%.
About one.
Yeah, what happened?
It hit about 1 o'clock. It looks. If you look at the 1-minute charts on the stock, you see it drop off the table about 1 o'clock. Boeing stock traded down to about $200. It's actually recovered slightly to be down now less than 1%. Here's the story. Boeing said that it warns of new defect on the 787 Dreamliner will slow deliveries. They said there's an issue related to non-conforming condition on a horizontal stabilizer fitting. So there's some reason that Boeing's not able to deliver their planes in a timely manner. The company said it will affect deliveries of the planes in the near term, but not the full year delivery outlook. So they think this is probably something temporary that they can fix and get right back at it. But certainly not the news that a company like Boeing that is so desperate to get planes delivered to customers, because you deliver a plane, you get cash, you improve your free cash flow. So they want to be delivering planes, not with more and more setbacks in terms of design flaws. So yeah, a little problem for Boeing, even though the stock traded down to 200 and change, came all the way back, Oliver. So problems with Boeing, that might be weighing on the Dow, or it was for a little bit. But like I said, down less than one, just right around 1% now, down $2.
Yeah, we're trying to grind it out here. The market just takes hits, keeps standing, and I'm surprised also a percent.
Upstart's up 10%.
Not a big decline when I would think that
the intraday moves on Upstart have been crazy for the last month.
Production flaws, it just should be a zero tolerance thing for this company. So I'm kind of surprised at how firm it is, to be honest. Only down 1%, especially with the delay.
Volume down here too.
Still just focused on the fact they got those big orders already the last couple months. Okay, Boeing down. Golf stocks up. Thanks, guys. Appreciate it.
Really doesn't look like it wants to stop.
Let's get into the macro conversation ahead of next week's
Of our side divergence is there, though.
Right now, but where we left the commentary from the FOMC officials was slightly on the dovish side, despite economic data continuing to beat expectations. Danielle DiMartino Booth.
An engulfing red candle here.
CEO and Chief Strategist at QI Research, Quill Intelligence. Danielle, great to have you on the show.
Thank you for having me.
Okay, so there's a lot here that I think doesn't make sense, frankly, about the Fed skipping this meeting. But now that, I guess I've already kind of polluted the water here. What are your thoughts on it? Is that the right move?
Well, I think there's something to be said for the fact that even though headline unemployment did indeed surprise to the upside,
yeah, spreads are great.
And we saw that
there's hardly ever a reason to just buy a put or buy a call. I mean, to need the kind of unlimited gains of a naked call, uncovered call, or uncovered put.
So this is like
it's very, very rare.
Filings that are more than 100% up year over year, that even more.
But they do move differently because you don't have the short legs, so you like to time it and catch the volatility, and yeah, with the short leg. But that also makes them easier to trade when they're spreads. Starting to waver up here a bit.
Data that were pretty good. Some of our regional, the economic surprise positive while the odds drop. Is that not somewhat of an odd conflict?
So I don't want to get too far into the weeds here. I really don't. But S&P Global Services blasted out to the upside a few days ago. They were like, "Oh my gosh, the service economy, 80% of the U.S. it's blowing and going." Nobody paid attention to the ISM services, which is the ISM non-manufacturing data, which actually just about avoided contracting. The employment index did contract.
Max loss, you shouldn't have a max loss unlimited. I suppose if you got assigned,
fast traders don't appreciate is that it excludes
you didn't exercise your other leg.
Construction, mining, and wholesale. So 5 major areas of the economy that amount for 20% are not included in S&P Global's figures that are included in what we see out of the ISM, which is appreciably weaker. And by the way, it agrees with all of these regional Fed surveys that we're seeing on the services side that say
get fleshy flush spy.
So by no means, even
your little head and shoulders
surface are better than the expectations, by no means is the economy robust and booming, right? I mean, for the most part, we're still kind of in a slowdown from the last year is what you're arguing.
Well, and I don't even think that it's a slowdown from the last few years as much as it's actually accelerating momentum to the downside, because at QI
if you're doing a call credit spread, it's the short call, because it could go unlimited to the upside. It can't go unlimited to the downside. It can only go to 0.
two-thirds of people
if you're doing a
electing
put credit spread.
benefits. Last week, we had 91% of the population living in a state with rising unemployment, continuing claims, the rise. So, and that's when neighbors start to talk to neighbors. And the other thing we have to keep in mind is that this employee retention credit that the IRS is finally becoming wise to, it's pumping in more than $20 billion of cash, fiscal spending cash into the economy every single month in the form of business tax, business income tax refunds.
Yeah,
That's what's holding up travel.
The unlimited part is only
So many other kinds of services.
only if you get exercised, and then you don't use your right on the other contracts. So one contract you have a right, the other contract you have an obligation. If you have to fulfill that obligation because someone else uses their right, then all you do is you use your right on your long options.
We are giving as a government a lot of money away to the wealthy while we prepare for the average household with a student loan to get hit with a $393 average payment in less than 2 months' time.
Is the economic tightening as a result dangerous and scary enough to give us a pass on the inflation fight? Because our numbers on the inflation have also been slightly surprising to the upside. So the point about the economy being soft, I mean, well taken. The inflation numbers seem to have plateaued, though, at what is supposedly too high of a level. Is that just the Fed not really being serious about their 2% mandate, or do you think they see the same data you're looking at and go, okay, we're just too fragile to try and push against that inflation?
Well, I think the Cleveland Fed has a separate metric. All my trader buddies, by the way, they follow something called Truflation, TRU, FLATION. It's about 2.75%. It's a real-time inflation metric. And by the way, the same gauge for the United Kingdom is north of 10%. So this is it's truly showing disinflationary forces in real time in the U.S. economy that are much different. They depart far from what some of the official data show. And again, I go back to some of these regional feds and the things that we're seeing from ISM non-manufacturing surveys. We've never seen the supply chain that we were talking about 12 months ago. We've never seen delivery costs collapse.
And it's failed.
So a new Fed survey came out just a few minutes ago
Maybe.
that showed that they had a record low level of cost for transportation. Again, Oliver, 12 months ago, we were talking about cargo rates and ports and how much it was to get trucking. All of that's gone.
Mm-hmm. So the supply, particularly, that's basically been extracted out. Right?
BBBYQ up a little bit. Back above VWAP, 24.95.
Problems. We see that, to your point, the economic softening maybe contributes to the demand side of this. We know what the Fed watches, though. They don't watch Truflation. They watch PCE. So should we be then starting to think that maybe Powell is not, the aggressor, the hawk that he led on to a few times over the last year, if he's going to let these skips come into play while we're at 4.5%?
So, I only spent 9 years inside the Fed, and what I can tell you is that the idea that they're going to pause on interest rate hikes in June and restart in July,
yeah, it's weird.
I'll believe it when I see it. That being said, the markets are not pricing in rate cuts as aggressively as they were. In other words, I think most traders out there are starting to come to grips with the fact that we might have a higher for longer regime. Jay Powell has no intention of stopping quantitative tightening anytime soon, even as Treasury goes to sell $1 trillion of Treasury bills, and we expect reserves to come down as a result. So, but again,
Might as well figure out spreads for sure.
Lowering interest rates or of stopping the shrinkage of the Fed's balance sheet. Markets love liquidity. That's their lifeblood. And the Fed is not planning on injecting liquidity anytime soon. So celebrate the pause on June 14th, but appreciate that we're used to the Fed almost immediately jumping into an easing regime. I don't think that that's in the cards right now. I think Powell is still pretty hawkish.
That's a really good reminder and good point, because it's easy to forget the conviction with which the market had, cuts priced in. Just even looking at September a month ago,
spread all over the market.
Flip of a cut. So, that I guess, is sort of it's more of like an implicit hawk, right?
Your break
the
lines?
lack of action to cuts as opposed to like a forward aggressive hawk of hiking.
Again, I completely agree. Something has definitely gotten underneath Jay Powell's skin, spooked him. And you know what? It could easily be increasing reserve requirements, which had been in the plans at banks. So in addition to being in a situation where the demand for loans, we're being told this by every entity, the demand for loans is collapsing. In addition to that, we're being told that banks are going to have higher capital requirements, and that's going to curtail their ability to pump loans, borrowing capacity into the U.S. economy. And the U.S. economy it's run on debt.
Good stuff, Danielle. Really nice work and very helpful for us to figure out the best way to describe the situation. Thank you.
Thank you.
Danielle DiMartino Booth, CEO and Chief Strategist, Quill Intelligence Research. Tony Zhang with some options trades for us next. We're going to do quite a bit of options focus over the next half hour. We're going to take a look at CVS, which has been beaten down to the ground.
I mean, any of your bigger brokerages are going to have futures on them. So, are you trading on a brokerage that doesn't have it? Well, the 127 target. Nice. Don't call for reversal yet, though. It's just consolidating still. Eyes still melting up here. No, I would. No reason not to use the same brokerage you're already familiar with. Fidelity has futures. Pretty sure I would just use it on there. Fidelity doesn't? What? It's crazy. I mean, probably TD. Probably use Thinkorswim. Got a pretty nice UI. I trade on E-Trade just because that's where I trade a lot of stuff. But I have traded on TD also. Yeah, that's right. I imagine they'll keep their interface though. Buys climbing up here more. Got a little doji up there, it'll double doji. Be signifying a top. I'll leave it. Kind of just in no man's land here. FFIE up 30%. Neo red to green plus 2%. Avis 28%. Big lots 26. Buys creeping up also. Wheels up 15. Upstart 12. Dude, the Upstart chart's crazy. Overstock 10.
Joins us to host the Next Gen Investing to take a look at a few trades you spotted in today's market. Alex, firstly, let's talk Coinbase here. Shares are down, but I gotta say,
Hey, Ronald.
and I'm kind of stealing this from someone that
Yeah, Alex, I bought earlier when
was that it was our man Alex from Crunchbase.
your colleague was pumping it in here.
And he said he's surprised that it's only down 12%.
Consolidating.
I gotta kind of sympathize with that because the
An engulfing candle 2 days ago, though.
of coins now that the SEC says
Might fill this gap
are
still.
securities, if they win their lawsuit, that's a big amount of their platform that people are trading.
They closed their offering. They said they finished.
That's my 2 cents.
There you go. It's bullish.
Double-digit decline doesn't seem too bad for Coinbase here.
Yeah, I guess I'll go with the opposite side of the argument to balance
Please
it
do.
out. Would
Okay.
be
we need that.
Which would be, I suppose, that one, those who are interested
Give me
in these
2
products,
1/4.
serious, like the really, the DeFi types in
Yeah.
terms of decentralized finance.
Yeah, Kevin O'Leary.
Don't really care that much about the SEC probably, and this reputational damage to Coinbase probably is not that.
But they
that
literally
big.
won't be able to trade them.
Well, Bitcoin and those ones, if you're allowed to trade those, supposedly. But what other game in town is there for crypto? Is my real point. Is I guess you have Binance, you got Coinbase now, and as Andy Swan from Folio told us on Fast Market, you can actually withdraw the coins on Coinbase. I didn't know that, but I guess that's a key distinction that allows you to feel more confident with it. But
You're actually holding it. You're not just.
I did find a trader though that
You're not just internalizing it.
maybe,
Give me numbers on a
little more
screen.
bullish or sees this as, I guess, what the crypto bulls describe as FUD, fear.
It's actually in a wallet. It's not just
SEC slapping
pictures.
you with a lawsuit saying you did what basically everybody knew you were doing, selling unregistered securities, and it's fear, uncertainty, and doubt for
There we
those
go.
not in on the crypto lingo. That's FUD. It's what cryptos bros like to say when things don't go their way. It's FUD.
Yeah, so July monthly, 60 calls, 900 of them went across at 318 for a debit, so $286,000 trade, and unlimited max gain, obviously. Break even is 63.18. To me, this is someone who is looking for a bounce back. They might not actually anticipate that this is going to get all the way there. If they did plan to hold, July options through expiration, they would need that to happen. But this is potentially a trade that if you get any sort of, bounce back in a day or two, as more details come out, possibly you could see this appreciate. But it's going to come down to a big piece of this is relying on implied volatility remaining elevated too. Obviously, that's another factor into the price. So if suddenly everything was settled, maybe the implied volatility would come down too, and you could actually end up losing even if you got a rally back, because it is quite a bit out of the money. But I just thought it was interesting because it's quite a big trade, and it's quite bullish for not a huge time horizon, only going out to July.
Okay. All right, someone's betting that it comes back. I mean, look, hey, if you made the trade on Bitcoin, the asset, then it was pretty smart. Bitcoin's up 6% on the day. Now, yesterday's, it's up 5.5%. Yesterday's drop still eclipses today's rally, but we've made back a lot of lost ground in BTC, so an impressive little bounce back here. It was at 27,500 before the news came out, so it's almost even, $500 away. So bullish trade at Coinbase, all right. How about for AMD up 5%? You know, we're still below the 130 high from last week, but 5% on a day where the Nasdaq's flat seems like we're still ripping these AI plays.
Yeah, and this one stuck out to me because of how short term the trade is. And so what I looked at here was AMD calls that came across the board, 955 of them. Piper Sandler upgraded the stock and price target was 150. So there's optimism kind of piling on. June 9th, 130 calls on this, 74 cents, bullish trade. $70,670 is the max possible loss. Unlimited maximum gain. Break even is 130.74 on this one. What really stuck out to me though is it's June 9th expiration, and so the June 9th aspect of this is just so short term. Obviously just this Friday, and so when you look at that, basically this person's expecting this rally to basically surge through the end of the week and eclipse 130.
Okay. Hey, I mean, anything's possible, right? We already touched above it, so you just have to break through. NVIDIA already got the all-time highs. NVIDIA's slowing down a little bit today, 1%, but AMD still ripping. Chips overall kind of higher, but not a big blockbuster day. Going to be important to kind of see what kind of follow-through they have. After they shattered the ceiling, thanks to NVIDIA's big breakout, what happens next? Do we consolidate? Do we go sideways? I feel like that's maybe one of the better outcomes. Or do we just keep melting up? Do we crash? I mean, look, those are the three. So this week, without any real news flow, we'll kind of see the path of least resistance. Tomorrow morning, we've got Campbell Soup earnings. What's the trade there?
This is pretty big for a name like Campbell Soup. 1,500 of the June monthly, so it's next Friday's 48 puts. 42 cents is all for the debit. But with an earnings date on the horizon here for tomorrow morning, this is likely an all or kind of all or none type of a trade, in the sense that we might have news that keeps this stock elevated above 50 or where it is now, and this is likely to expire worthless. So into the mind of the potential investor, given its size, given kind of the area of the market that we're in within consumer staples, this is either a highly speculative directional trade, or it's some sort of protective put on a long stock position. I tend to lean more to the latter, given that it's a consumer staple, given the nature of the time horizon, given the
there's a
nature
bigger
of this
candle.
earnings event. To me, this is likely someone who is seeking some sort of protection from a catastrophic downwards move to accompany a potentially large stock position. Can't know that for sure. Obviously, we don't know who's on the other side, but just given the timing and the size and the position of the trade, it just sort of seems that way.
All right, so just straight up buying puts.
Just buying puts.
Wow, all right. Maybe we're going to get a chunky miss. Thanks, Alex. Earnings in the morning. Appreciate the chuckle. All right, when we come back, let's get an update on the biggest winner of the day. After a pretty brutal earnings reaction, VFC, the apparel maker, is up. The owner of Vans and North Face. Jenny will tell us why it's rallying so much when we come back.
They cued the music like so long before they actually ended it. Big volume on that dump there too. Oh wow, we've only got 20 minutes? What the heck? Power hours? We've been having power for 40 minutes? You guys. We're almost up to 10-minute rig. Tesla? Whoa. Mine is coming down. Sound of a WAP. Microvision, 30%. Yeah. Oh, you've been talking to Tesla here, which it has continued to climb, so it's good. I still don't like doing something Reddit resistance. Even the breakout I don't like to. Prefer to retest, get it back at support. But yeah. I'll move a tad. The candle back up there. 18 minutes to go. Where it's going. Wednesdays will gap up to 30 bucks. Maybe on earnings. Why are they gonna get such a gap now? What kind of news are you expecting? I bounced him all the way back up there. Wow, look at that. Wow, wow, wee, wow. I'll come up on 15 minutes. Head and shoulders are now forming. And it's failed, it's still going up. See if we get a VWAP flush into close. 10 minutes of Fugazi.
this kind of risk-on, spread a little bit away from some of the mega caps. A lot of folks talked about the concentration, and it does seem like it's broadening out a little bit. But generally speaking, the decoupling between Bitcoin and the NASDAQ has been one of the most profound that we've had in the last year. The only other time, according to my 30-day correlation, this disconnected was when FTX was FTXing.
Can't get electronic transcript.
Caught down in the immediate aftermath before they all came back together.
What?
That was, of course, basically before our epic 6-month rally we were on. But what do you think?
I mean, we have it.
Does the NASDAQ
it's been transcribed, right?
Or are we finally losing crypto here?
That's weird. What's on that one?
We're really on this verge of seeing, within a manager risk the downside. We don't know what events are going to happen. That's not just Bitcoin across the board.
Did we stream that one?
We're in a bull market. Let's be honest. We're in a bull market in equities right now. And I think we're on this, we've had the big leadership move and over the past couple of months. We're going to start seeing a bit more rotation through different indices.
All right, 1 minute.
Like
1 minute to 10 minutes.
Russell 2000 got out above the 382 retracement, got out above the 200-day moving average, got out above Friday's high. I mean, the thing is up more than 3%, almost 3% today, and it's been a big move. I think we're going to start seeing some different rotations take place. Friday was about healthcare and industrials, which kind of led last
That's
week.
weird.
And then we get
They
this
just
week,
released a docket saying that.
the ISM services
What was in that
data,
one?
I think threw some
Rewatch
people
it.
off and threw the markets off a little bit yesterday, but it was actually what we should want for risk-on environment. And I think leading into the Fed, 4,300 in the S&P is going to be the big area. We got to get above that, and we're obviously watching that very closely. But there are different sectors and different indices showing very constructive moves here and breaking out. I just think we're going to see more of the same, and that's a bull market move higher. Where we in the intermediate term, we could see other names and other sectors catch up to the big five a bit.
Here we go, 10 minutes.
And that's going to be interesting here. That's where I think these
10 minutes
rotations
of pump.
is where you outperform throughout the year.
All right. What's the juiciest trade in the Bill Baruch strategy right now? You got something for us here? We got about 60 seconds.
Well, I like the move here today in Shopify.
All right, so you're on Shopify.
See if that could extend. I like the move in the Russell. I mean, we've been positioned long in the Russell, going back to last week and adding into it yesterday. But I think the path least resistance higher in the Russell. We've been trimming some names. We've been leaning really heavy into the semiconductors, and we're starting to rotate out of that a little bit. But we're still keeping exposure there.
Okay. All right. Thanks very much, Bill. Good convo. Always appreciate the check-in. Bill Baruch, Blue Line Futures. Coming up, we got Randy Frederick and Colin Martin joining us for the Schwab panel. Talk bonds, talk stocks, set you up for the week ahead. Minimal data. What do we do with that?
Wait, you can't get an electronic. Only available until then, or you can't get it until then. Not available until then. Really strange. What's on that court hearing? Maybe we should play it backwards or something. Maybe it says Ryan Cohen's gonna buy BBBYQ. Big moves, yeah, a little pump to the upside, but it chopped around yesterday at the last 10 minutes also. I think we usually get more of a move. Well, now we're coming to 5 minutes. I'm moving up, man. Still on this channel. Bitcoin ripped today. 5%. Wow, look at that bounce out of that sell-off. Surprised on all this SEC news. Is that bullish for it? I'm moving up more. Testing the high. Starts at 5 hours. There you go. Let us know what you find, Cameron. Play it in reverse. Well, we did get a move on SPY. It's to the upside. Whoa. That candle back down. It's crazy. I'll spare you the bell today. You've been spared. Tesla pumping into close. Probably part of that push. Oh, it totally is. Who's on Tesla? Yeah, that looks like news. I don't see anything yet though. Ooh. No bell. Alright guys, congratulations, we did it. 460. Barbecue down 1.6 today from the open. Yesterday's close rather. But basically still flat out of this bull flag. Oh, it looks good. Inverse head and shoulders here on the chart. Up kind of a handle. We do retest here, be fine, but I think we can move up also any day on the daily chart here a little bit. Because it still seems like we're just repeating that same deal from a couple weeks ago. Right, so you've got 1, 2, 3, 4 days up, and then a 5th day up, but it's red and it comes down. It kind of flattens out, consolidates, and then starts rallying again. 1, 2, 3, 4 days up, 5th day is higher, red candle kind of comes down. Now we're in that flattening out phase right here. So, yeah, I think we're like basically right here, or right here. Yeah, so today's the 7th day. So, I don't know, I think the next few days we might start to see some green candles. Could be slow, could be fast. But, it looks like it's mirroring this. I'll go. And as we continue to hold this support, just building up pressure to continue to rally. And if we have to keep getting delayed on the news, then we'll just trade with the momentum. It's looking good still. Maybe not a sell on Friday. We might be in a rally on Friday. Let's see. This was Friday last week or 2 weeks ago. So, but then the next week we had the rally all week, and then Friday was a sell-off. So it could play out like that too, where we don't start rallying this week, but next week. We'll see, but might not get much of a sell-off into Friday if we don't move up a lot before then. Fine, moving up after hours, 0.07. GME plus 1.6 on the day. The price action looks like it's still repeating this. It is kind of out of that channel, but still bull flag, consolidate, bull flag, consolidate. So, golfing. However, tomorrow we have the catalyst of earnings. It's after hours tomorrow. We'll be streaming it, I guess. Yeah, let's see. Yeah, I'll stream it. I'll probably do 2 streams though for organization. But that said, we are diverging RSI is still there. Well, it looks like the rally is weakening, but it could all change tomorrow. Last 5 minute candle was 6 million on Tesla. Yeah, that candle on Tesla was insane. That's what rocketed the SPY. Thanks, Christopher. Everything to the moon. Lady has a distinguishing comment. Talking horse bear looking for an individual asset. Wait, what? A distinguished comment between stalking horse and bidders. No, I don't think the leaked. No, yeah, the companies that we're seeing on the media, they're the stalking horses. They're just looking to buy up, yeah, piece it out, buy up pieces of it. I mean, we've been able to tell from their writings, like, the one wants to close down all the stores. The other one wants to just buy the domain and the trademark. And it did say one of them wants to keep 75 of the stores open, but it was an unknown one. So that could be one of the stalking horse bidders. But there was not much info on that. But yeah, all the ones wanting to just chop it up into pieces, they're I wouldn't consider them a stalking horse bid. They're just wanting to get it on the cheap, like overstock. They just want more stock to sell, I'd imagine. So, home for a storm. GME stream. Yeah, we'll do an earnings stream. I should be able to look through their earnings again. Unknown was the Jack and Genie? No. Who says that? That was just another one that came out. Jack and Genie said they wanted to close the stores. They didn't say they wanted to keep open 75%. That was the one that said they wanted to keep open 75%. They didn't. I don't think we've heard still what the unknown one was, and we probably won't. But there's no way we're gonna know. I'm not gonna say this was the unknown one we were talking about. But yeah, we'll just see. Thanks, guys. Appreciate it. Thanks, Thundercube. Thanks, Cameron. Thanks, Jay from the Bay. Al, appreciate it. Christopher, Cameron, Think, the men. Appreciate your support, guys. Thanks for your likes today and your participation. We're at 47 likes. Well done. Almost to 50. Almost 50, guys. Thank you. That's awesome. That is awesome. Jack and Jane wants the stores, the baby stores. Oh, okay. I still don't think that was the unknown one or whatever. Almost 50 likes. Appreciate it, guys. Thank you, Ace, for the gifted membership today and your continued support. We will see you guys on Discord. Sub up, like up, comment down. Happy money sticks around. That Discord link is in the comments. It's pinned. If you haven't joined, welcome to. It's free to join. We also have a Twitter. Follow us on there at Happy Money YT. Up on Twitter Spaces from time to time. And that's what we got. Thanks, guys. Thanks, appreciate it. Have a good afternoon. We'll see you later.